Zooming back out, it is still that chip story that matters, but perhaps not from a risk sentiment perspective, Guy, that we were waiting for. Maybe a little bit of a sum of all parts trade.
Absolutely. But it's going to be interesting what the aggregate effect is, as you say. Let's talk about what the opening trade looks like. Here we go. Are we going to see some volatility? The trend thus far this week has been for no volatility, and I suspect we're probably going to see a bit more of that. The next big volatility event maybe comes tomorrow in terms of the inflation data out of the States, but definitely next week in the form of the payroll number. So here we go. European markets are out of the gates. The FTSE 100 is weakening up a little bit, 0.1%. The Stock 600 is up by less than 0.1%. The IBEX is absolutely flat at the get-go of trading this morning. Are we going to see a Pernod effect into the luxury sector? We'll wait and see whether or not that delivers on the CAC this morning, but it is absolutely flat as well. The DAX is absolutely flat. If you'd have said yesterday that we're going to see a big move in Nvidia and we're going to see very little reaction in terms of the European markets this morning, one way or the other, I think you'd have been a little bit surprised, but maybe the reaction in Nvidia wasn't actually that big. But if you're going to sell big tech, do you buy Europe? Is that the value trade? Is that where you want to position money? I don't see much reaction to that story this morning, Ollie. Deeper dive, if you will.
Looking into the sectors this morning, as we saw yesterday, we saw sort of chemicals outperform, basic resources down. This morning, again, we have media sort of up 0.5% this morning. Real estate catching a bit of a bid. Travel and leisure just a bit to the upside, 0.2 percentage point. What we're seeing being sold today, perhaps not shockingly, technology is the second worst performing sector in Europe right now, down 0.2 percentage point, and also energy down by about 1/3%. We should also mention we just got these CPI numbers from Spain, and I think worthy of noting, month on month, harmonized Spanish CPI 0%. There was zero inflation in Spain in the month of August.
And the estimates were higher, to your point, and you pointed that out. The estimate there, from a year-on-year perspective, was 2.4. They're coming in 2.2%. So this is a really big deal. This is a success story in Europe and arguably in the rest of the world where you're seeing it.
Look at the core number. The core number's up.
The core number is up.
Sorry, the core number is up versus expectations, down versus last time round.
It is.
Yeah. And it's that sticky core that I think the ECB's worried about.
It is, but that, I think, is to energy prices. If you look at the sensitivity as well from the Spanish economy, of course, all of Europe is far more sensitive to the energy story, but within that, Spain, of course, has that as well. Let's bring it right back down to the micro, because you were talking, speaking of energy, the story that's moving the markets this morning, the underperformance. You talked about commodities and the basic resources. Shell, BP, Total, that is where your biggest weights are coming from. I should also point out that Morgan Stanley strategy is cutting European energy to underweight. So I'm sure there's a little bit of a read-through there as well, Guy.
You're not seeing much of a move in Brent this morning, so it's not coming off the fundamental story, as you say. It may be coming off that note that we're seeing in terms of the stock story. So it's a sell-side story rather than anything else. Let's go into some of the other movers and just see exactly what we're seeing here. We've kept an eye on what's happening in the luxury sector. You've had the Pernod Ricard numbers out this morning, so just keep an eye on that. Elsewhere, though, in terms of the points, I can't really see a discernible trend this morning. Luxury's not moving significantly down on that. So you've got LVMH and L'Oreal, both of which have been really big drags recently on the French market. Are actually performing reasonably well. As you say, you've got a mixed bag on the downside. ASML, Novartis, Diageo. I think Diageo might be ex-dividend this morning. Nestle, and Total all seeing a little bit of softness this morning.
Yeah, and we're just getting the opening price from Pernod Ricard right now, up about 1 percentage point after flagging that sales in China and the United States are soft in the first quarter. That is sort of continuing a trend that we've seen for this company for basically the whole year. I mean, this is a company that is down 30% over the last year. So that is something that we watch very closely, particularly when we consider the possibility of an escalating trade war with Europe and China. This is one of the only categories, food and drink, where Europe has a surplus with China.
Yep. Dairy products.
Cheese
is going to be an area you want to watch out for.
The cheese. I think we talked about yogurt as well. So we're going to keep a lot of that, but that's in the grocery space. We still have that read through in the geopolitical overhang over the chip space as well. ASML, of course, taking a little bit of a hit off of the NVIDIA numbers as well. Let's get back to that story, because even though it may not be having a macro effect, it is having a micro effect. Take a listen to what Jensen Huang told our very own Ed Ludlow yesterday.
We're expecting Q3 to have more supply than Q2. We're expecting Q4 to have more supply than Q3, and we're expecting Q1 to have more supply than Q4. And so I think our supply condition going into next year will be a large improvement over this last year.
Jensen Huang, CEO of NVIDIA, they're speaking exclusively to Bloomberg yesterday about how supply continues to improve. Let's get another viewpoint here. Michael Falcon, CIO and co-founder of hedge fund Titan Capital, joins the program this morning. Pleasure to have you around the table. Thank you so much for joining us.
Me.
Of course. Look, we had such a big anticipation and ramp up to these NVIDIA numbers. And I'm not sure if you have individual thoughts on NVIDIA, but I'm curious about why we're not seeing a bigger reaction here. Is this just kind of investors, the rest of the world really, even economists looking at this and saying this is a one-off, this is not something to be concerned about? Or is there a macro read-through here?
I'm not sure so much about a macro read-through, but they obviously have had some ramp-up issues with Blackwell chip, and that was partly expected. I think in terms of NVIDIA aftermarket's reaction, it was obviously some disappointment with the next quarter. Market has gotten used to them beating by about a couple of billion. They beat by $1 billion. Now they're talking down numbers a bit in terms of Q-on-Q growth, around 7.5–8% versus 15% in the last quarter. So that's obviously a concern, but they're going to make it up towards the end of the year. So I guess it all remains to be seen.
I'm having a little bit of deja vu here in that comment here that there are production issues in the chip sector, potentially more supply than expected in the future. Doesn't this give you a little bit of tone of 2021, especially when it comes to the chip space?
No, yeah, obviously the chip space is hugely cyclical, and it's always tough to predict when the turn is coming. But so far, AI spend has been a huge driver for NVIDIA, of course.
In terms of what comes next, what are we looking at? Is there a read across into the broader market here that I need to be thinking about? Can I put it in its own bucket, or do I need to think about it? How are you thinking about it in terms of how you're positioning your portfolios?
Yeah, so from our perspective, NVIDIA in isolation, great numbers for several quarters in a row, but that spend being put to work in AI chips and GPUs has to come from somewhere. Yeah. So last night, Salesforce reported, that they pretty much beat expectation by a fraction top line, but you have clear slowdown in the growth numbers coming from 11% first quarter, 9% second quarter, guiding 7% in the third quarter. So their apps are obviously seeing a slowdown in growth. So that suddenly is becoming more of a cost-cutting story. And we see that, just as a side example, Klarna, which is a Swedish fintech company that cut the workforce here, went out with it on Tuesday from 5,000 to 3,800 employees because of use of AI. So there you have a user example. Yeah. And they're also cutting the use of Salesforce apps, which is quite interesting. So the spend is moving around.
So we're starting to see an effect actually beginning to happen. If we say, go.
I was going to say, isn't this exactly what Larry Fink at BlackRock talked about, that AI would basically take over the labor market? And now you're seeing an actual effect of that?
Maybe, but we don't know yet how big an effect it's going to be. Klarna's an obvious example, but maybe. The other story I thought was interesting yesterday, we were talking about it, was the fact that maybe some companies won't use other companies to write their code. Basically, they use AI to write their own code, and you're going to see huge savings as a result of that. So maybe that's one area as well that you want to think about as you see the effect coming through. You don't need to go to the CRM company. You don't need to go to the company that's going to write your software. You can do it in-house. You just need to have enough capability using the AI to make that happen. So we're starting to understand where the value falls in terms of the AI story. As the AI story starts to develop, do I stay in the States? Do I stay here? Can I look to Europe? If the AI story struggles, does that give me a reason to buy Europe? How does this change the geographical breakdown of how you think about where you want to put money to work?
It's obviously U.S. innovation first. It's been
Right, so you just stay there.
extremely impressive.
Yeah.
Well, the valuations of S&P is quite high, and expectation for earnings growth is mid-teens.
Yeah.
So do you want to buy that 20 times plus earnings? I'm not sure. We're pretty much peakish market, near all-time high on S&P.
Yeah.
But we're also near all-time high on DAX.
Yeah.
And Europe. When did Europe last grow?
The German data isn't exactly encouraging on that front.
No. So, yes, I'd rather stay in the U.S., but it's very top-ish markets, and there are opportunities to be short.
Okay.
Are those opportunities in the tech space?
I think several of the app developers are in for a tough time going forward.
Can you name some?
Well, Salesforce, I think, are in a very tough spot.
Tell us why, though. Like, explain that, though. Even though these are some of the biggest companies, they're sitting on piles of cash, and you're not the only kind of hedge fund manager to be talking about that. It's not a secret that so much of the smart money here has been driving these big moves in tech. But why not stay invested in the long term, especially in both a positive macro scenario where you do have an expansionary business investment cycle, but even in a negative scenario where it plays a more defensive role? Where is the downside here?
Well, there's a lot of spend in AI. There's a lot of upstarts coming out, and there's going to be increased competition. So increased competition when you also have user cases like Klarna. They said they're going to ditch Salesforce. They said they're going to ditch Workday coming forward.
Yeah.
So there's going to be more like Klarna examples. So you're finding potentially smaller pie with increased competition. That's a tougher spot.
And I want to just bring it back to the CPI number we just got, because obviously this is what we're going to be watching over the next couple of days to determine where the ECB goes in just 2 weeks' time. So just to recap what we got, the month-on-month figure in Spain for the month of August at 0%. Expectation was for an increase of 0.2%, so much better than had been anticipated. But as Guy pointed out, the core a little bit stronger. What are you expecting in terms of inflation? Do these numbers actually matter when we get over the next couple of days to determine where the ECB is going, or is that just kind of locked in?
Yeah, I don't have a real strong view on ECB per se, how much they're going to cut, but what's priced in is what's priced in, and usually tend to be wrong. You've seen the flip-flop in the U.S. Now we're pricing in 100 bips for the remainder of the year. 35% probability of cutting 50 bips in September.
So you don't have much faith in the market on this one.
It's a tough call.
Let me
There's
ask you
a lot of moving numbers.
Yeah. Who do you have faith in to boost growth in Europe? Whose responsibility is that? Is that the ECB? I mean, you're talking about how there's basically been zero growth. Is that just the story that's going on? Are we just in a coma for the sort of months and years to come?
Well, let's just wait for some fiscal boost.
But do you think that will come? Because of course there is limited headroom in a number of countries, maybe at the EU level.
Well, I think the national economies themselves, they have to focus on what's best for them, and of course at the broader EU level as well. But I think that we're in for some pretty tough GDP numbers in, let's say, 3-4 quarters down the line, and then fiscal has to come to help. Rates, it's great when they get cut, but it takes some time to get them to work. Just look at the U.S. The raising of rates took forever to work, if it has worked.
Is equity going to lose out to credit soon? This is your kind of stick, the kind of the relationship between the two, and you trade that relationship. Are we seeing a value transfer from equity to credit? Do you see that happening in a meaningful, big way? What are the examples that you're seeing right now in terms of how that is working? Spreads seem very tight at the moment.
Yeah.
Credit is pretty strongly bid too, so I'm wondering where the extra juice could come from there.
Yeah, no, it's a great question, because on a pure index basis, you see high yield spreads at 300, and that's tight. Historically, it's near all-time tights. So that's kind of a scary scenario. But outside of the bigger indices, there's a lot of dispersion happening. Companies have to refocus on rebuilding the balance sheet of these 10, 12 years of nothing rates and tight spreads. They've had coupons in the kind of mid-single digits for companies that are under some structural pressures. And when they haven't come back and fixed the balance sheet, they have to use equity. So what happens? Well, they dilute equity holders to the benefit of creditors. And over time, you
see more of that happening?
Oh, absolutely. Several examples as of late. Lucid, the EV maker, having to spend a bundle to build out their factory in Saudi and ramp production. Have a huge backer in the Saudi PIF, but they've done convertible preferred, they've done common equity in what? To help the balance sheet. So you transfer value from equity holders to creditors. And I think there's going to be more and more examples of this. And we see that throughout the year. Rivian, same example. Volkswagen coming in, $5 billion ticket to be spent over time, but still at the benefit of the balance sheet in the end, at the detriment potentially of equity holders. Like equity story, it's a hope.
It's liquidity transfer.
Yeah, exactly. And credit, that's a legal obligation.
But it is a legal obligation, but how do you protect against the downside of that? Because right now it almost feels like in the last 6 months we've gone from almost a liquidity crunch a conversation when it comes to like a short squeeze in the equity market driven by tech, or even a bit into the treasury market. There's been a question of kind of yield error there as well. How do you hedge that? Are we still concerned about liquidity?
Yeah, liquidity is a concern. That comes in ebbs and flows, as you all know.
But dive into the details of that. Where are you seeing any crunches?
No, not at the moment. Obviously, there's days where there's volatility, as we saw the other week in August. But it's not anything that is flagging at the moment. Usually, liquidity takes some time to show its ugly head. So to say. So it's a bit too early to say, and I think credit spread tells you the story. When it's high yield is at 300 basis points.
But the hedging to the downside, what does that look like?
Well, we usually take a long position in the credit and short the equity against it.
Nice to see you. Thanks for stopping by to see us. We'll keep an eye on this one. Looks like it's going to be a story that's maybe got some legs. Michael Falcon, CIO and co-founder of Titan Capital. Thank you very much indeed. Let's take a look at the big stocks, see how they're moving. The core in Europe looks a little bit like this. First thing this morning, is it a strong core? Is it a weak core? Clearly, you're going to see some effect coming through from NVIDIA, but it's not that great. Look at that. ASML is up this morning. That is fascinating. Ferrari. Take a look at the Ferrari chart over the last year. It's taken a significant leg higher of late. It continues that turn higher this morning. LVMH is up. This despite the warnings we're getting through in the drinks sector. It is tracking higher as well. Europe's core looks pretty strong this morning. What else are we watching? Joe Easton, over to you.
So as you say, Guy, these chip stocks really holding up in the face of that decline for NVIDIA. Remember, $32 billion in quarterly revenue, still pretty good. And these stocks are already down sharply since that July sell-off that we saw in the global tech market. So actually, most of the main chip companies actually higher. Bit of weakness in BE Semi, but remember, some of those issues with NVIDIA were potentially stock-specific on production. So not a huge read across today. Then in terms of the drink stocks, another sector that's been battered really over the past couple of months. Pernod Ricard actually managing a gain of 2.2% despite warning of yet more weakness in both the US and China, those key markets. We're seeing Remy edging higher as well. Also Campari. As Guy mentioned earlier, perhaps Diageo might be an ex-div, worth bearing that one in mind at the moment, but not too much impact in terms of that update. Then there is a big mover. This time it's going to be in the shipping space because we have got a bit of M&A. AP Moller Maersk is buying this company, Concentric, over in Sweden. It's a maker of hydraulic pumps that sells into the auto space. But look at that, a 58% gain for that stock. Clearly unexpected bit of M&A news for us today. Then over in the energy space, it is driven by that Morgan Stanley note. Morgan Stanley saying they see weakness in the oil and gas industry in terms of the pricing, the crude price, gas price. That could potentially mean fewer buybacks in the energy space, according to MS. Got a couple of downgrades up here, Equinor, Repsol, but they do still see value. One stock they like is Neste over in Finland, and that was the best performer on the stock 600 in early trading, as Morgan Stanley still recommends buying that one. Over in earnings, CD Projekt, quick look at that one. It has been one of the best performers in Poland over the past couple of years, edging very slightly lower today. Earnings looking pretty strong for the video game maker, the maker of the Witcher games. Finally, a quick look at Reckitt Benckiser. JP Morgan downgrades the stock after 7 years, recommending buying the company. Now, Reckitt has an issue around baby formula lawsuits in the US, and that's the reason JP Morgan no longer overweight the stock, and that one's edging lower at 0.5% this morning.
Joe Easton from our equities team, thank you so much as ever. I just want to take a look at the sectors again and what's going on in the broader market here, because we opened lower. The futures were pointing down by just a little bit. We have every single sector in Europe up today except for energy, and the best performer right now, guys, technology.
It's amazing, isn't it?
Yeah.
This is exactly what we wouldn't have expected this morning. You get NVIDIA beats, but then a little bit of disappointment. The stocks comes down. You'd have expected some sort of translation effect, but actually, maybe the market's just looking at this Blackwell issue and going, you know what, actually, this is just a story that is going to get better. It is going to get better. They're going to fix it. The yields are going to go up. And as a result of which, maybe this is going to be good news ultimately further down the road. The market definitely want to sees the glass half full this morning.
Yeah.
But can we also point out, though, that earlier this week, ASML did actually take a pretty big beating, and they did last week as well. So this stock has been down for a little bit, and arguably some of the weakness going even into NVIDIA was well telegraphed. I'm sure the ripple effects were also well telegraphed there as well. Not to mention, you love to say this, we're still in August. Light volume, light liquidity. That's a piece of the equation as well.
But that could have exacerbated the move to the downside. That could have had the opposite effect.
Absolutely.
And we did see that at the beginning of August. You saw a kind of a miss on the payrolls number. You get a lot of volatility. We haven't seen that volatility around the NVIDIA numbers this time around. Maybe it could have been worse. Maybe that's just the kind of view this morning that actually, all things considered, a 6% drop after hours in NVIDIA, we could shrug our shoulders at.
I'd like to see how it shows up in the U.S. session before we see how this shakes out, because that could we're not done yet, and it could very much reverse as well, right? If you see a 9% drop in after-hours session, saying a great buying opportunity for people who were looking for an entry point.
Do you buy the dip this morning?
Into NVIDIA? Yeah, absolutely. Well, speaking of buying the dip, or at least some weakness, coming up, we're going to be talking about car sales stagnating in Europe as that EV demand weighs on the sector. We're going to dive deeper into the numbers next and what it means for the broader sector. Stick with us. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
As the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Welcome back. 22 minutes into the equity market session, 23 minutes. This is what equities are looking like. They are bids. Surprising, maybe, given what we saw from NVIDIA overnight. But that is where we are this morning. We're up by around circa 0.2%. Bit of breaking news coming out of HSBC. Georges El-Hadri is going to be taking over on the 2nd as CEO. We're now getting some management changes around that at HSBC that are worth noting. We are seeing Nuno Matos is going to step down from being the CEO of Global Wealth. O'Byrne's going to replace him, so that's going to be interesting to see how the effect of that comes through. Group Chief Operating Officer John Hinshaw is also going to be leaving the bank. These are going to be changes that are going to take effect from October the 1st, i.e. a little later than the CEO shift comes through at HSBC. Keep an eye on this. We've been waiting for kind of the details of what the shakeup is ultimately going to look like at the top of this big European bank, this big global bank. Let's talk about what is happening in the auto sector this morning. We saw some data coming through in terms of auto sales out of Europe. The data broadly roughly flat, but within that, there's some big geographical shifts. There's some big engine-type shifts that are really worth paying attention to, Ollie.
Yeah, absolutely, Guy. And if we look at the macro story here, we're looking at the sort of EU new car registrations over the last sort of 2 years. And you can see post-pandemic, there was all that sort of buildup of demand. There were these sort of chip shortages. You saw those car sales just sort of recover. And this is just the top line for all kinds of cars. You can see now in the month of July, up by only 0.2% in the EU. That's really very, very flat. And that is across all the sort of different types. Let's try to drill into what we saw in terms of the actual engine types, because EVs have been in focus, as we know. So too have, diesel, gas, and hybrids. With EV demand in July, as you can see, deliveries down 11%. This is moving sort of against the direction that a lot of people in Europe would like to see, a lot of the policymakers. But guess what? You look at diesel and gas, you're not seeing much better in the month of July. They're down 10%, down 7%. And we should say that for the EVs in Germany, that figure in Germany for the month of July was down 39%. What is bucking that trend, Guy and Crady? What I think is interesting are the hybrids, up 26% in the month of July, as people sort of try to establish what's going on with the EV picture. Charging stations a little bit freaked out potentially about going into the EV story, particularly with the secondary market not holding up. Seems like people are going into hybrids. When we look at what this means for the actual car makers, that is sort of an interesting story here. Tesla down 15% in the month of July. Volkswagen down 2.2%. Mercedes and BMW bucking the trend a little bit. BMW was up 2.8% there. There's sort of a mixed bag here. But as you can see, the EV maker, Tesla, down 15%. Really a material move here in the month of July from what we're seeing.
Certainly something we're going to be keeping an eye on. And Guy, I think what's interesting, he's talking about that bump into the hybrid space. I'm curious how much of this is a ripple effect of governments around Europe kind of pulling back on some of that infrastructure spend when it comes to the EV story.
Range anxiety is a huge factor. You can deal with it by buying a hybrid. Toyota has been the biggest proponent of the hybrid, and everybody took the mickey and said, why are you doing this? You got it all wrong. You want to be making and accelerating the trend into EVs. Turns out maybe Toyota got it right in figuring out what was going on here.
And what's interesting is also Mercedes and BMW also holding up. So part of the luxury trade still holding up, which is what we saw in a lot of when the rest of the auto sector was going down, the luxury was still holding up. That being said, guys, Porsche from the VW group down 15% in terms of deliveries in the month of July. So, not really sort of welcome news at Porsche and Volkswagen.
Is that the aftermarket when it's affecting the Taycan and other products like that? The electric story for Porsche, you've seen some real value collapse in the aftermarket, which may be putting buyers off in the primary market.
Completely, and it's going to continue to happen in the EV space until this sort of reaches maturity in that market.
Yeah, and we know you're going to be keeping a close eye on that for us. Coming up on the program, going right back to the NVIDIA story, revenue doubling, actually. We're going to dive into more of the details and the market ripple effect. Stick with us. This is Bloomberg.
In tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
We made a mass change to improve the yield. Functionality of Blackwell is wonderful. We're sampling Blackwell all over the world today. We show people, giving tours to people of the Blackwell systems that we have up and running. You could find pictures of Blackwell systems all over the web. We have started volume production. Volume production will ship in Q4. Q4, we will have billions of dollars of Blackwell revenues, and we will ramp from there. We will ramp from there. The demand for Blackwell far exceeds its supply, of course, in the beginning, because the demand is so great. But we're going to have lots and lots of supply, and we will be able to ramp starting in Q4. We have billions of dollars of revenues, and we'll ramp from there into Q1, into Q2, and through next year. We're going to have a great next year as well.
Jensen, what is the demand for accelerated computing beyond the hyperscalers and Meta?
Hyperscalers represent about 45% of our total data center business. We're relatively diversified today. We have hyperscalers, we have internet service providers, we have sovereign AIs, we have industries, enterprises, so it's fairly diversified. Outside of hyperscalers, is the other 55%. Now, the application use across all of that data center starts with accelerated computing. Accelerated computing does everything, of course, from the models, the things that we know about, which is generative AI, and that gets most of the attention. But at the core, we also do database processing, pre and post processing of data before you use it for generative AI, transcoding, scientific simulations, computer graphics, of course, image processing, of course. And so there's tons of applications that people use our accelerated computing for, and one of them is generative AI.
So the NVIDIA CEO speaking exclusively with Bloomberg's Ed Ludlow. NVIDIA earnings demand for the Blackwell chip. This is all part of the conversation. We're really thinking about it in terms of a market driver this morning, seeing kind of futures bid down. But in the market this morning, we've seen a real turnaround. In fact, technology is the best performing sector within Europe. Let's get more on this from Robert Lee of Bloomberg Intelligence. Robert, I'd like to just start. Do you think that this was a fair reaction to the earnings in terms of the move in NVIDIA? And do you think it was the correct one?
Okay, great question. I think on the fundamentals, nothing has massively changed. We've maybe got a bit more clarity on the Blackwell rollout, although there still is some residual risk that maybe I can come on to in a second. So fundamentals, I think, it's sort of steady as she goes. But I think with NVIDIA, again, it's a classic potential mismatch between expectations sort of tying into where the valuation was and what was being factored in there and what they actually delivered. And whilst, the headline numbers were strong, that was expected, and there were many in the market expecting numbers to be even better than that. So it didn't quite meet those very highest of expectations, and it's inevitable you're going to get profit taking. But having said that, I think there are potential question marks and a cloud on the medium-term horizon, which maybe we can discuss in a second.
Hit me. Tell me about the clouds.
Okay, I would say people took comfort that the Blackwell is getting back on track following these sort of surprise announcements a few weeks ago. So Jensen, as you heard in the interview a moment ago, said this thing is sampling now. It will enter initial volume production at the tail end of this year, generate a few billions of revenue, and then ramp into next year. So this product is the main product driver for next year, main revenue driver. However, having dabbled in semiconductors for some years, the analogy I used with one of your colleagues earlier on is like making a cake. Say you're the world's best chef, making one pristine cake is amazing. Say suddenly you've got 200 relatives coming over from Ireland or whatever, delivering 20 cakes simultaneously is a massive task. So the challenge of ramping up production, which is what the company has to achieve through the tail end of this year into next year, is a non-trivial task. There is residual risk there. So I think people should just bear that in mind. And then the other medium-term risk, as I've mentioned numerous times, is, obviously it's a sort of arms race amongst the hyperscalers at the moment to build out capacity, but they are not monetizing at a fast enough rate. I don't think that will impact the near-term demand outlook for NVIDIA, but at some point, perhaps there's a day of reckoning. Again, if the customers aren't paying for these services, the hyperscalers have got to stop and say, well, we're spending tens of billions a quarter, the money's not really coming through. Does this really make the most commercial sense? That is a major medium-term question mark overhanging the story.
Jensen sounds pretty positive, though. Sounds pretty confident that the outlook medium-term looks good.
Well, he's the CEO of the world's largest tech company. You would expect nothing else. I'm sure he's a very fine, honorable man, but he's there to give you the outlook, hopefully a very realistic one. Again, I'm flagging here the risks. Maybe none of these risks come through, but again, I guess, one of the basic premises in the world of investment is risk and reward. So there's risk with everything, but when a stock is trading at such a high multiple, is it a fair balance of risk reward? And based on what we saw last night, the market decided to take some money off the table.
Okay, Robert. The market did take a little bit off the table. It feels like we're going to kind of bounce back, though, this morning. Maybe not in NVIDIA specifically, but certainly tech stocks not having the kind of morning you would have anticipated. ASML, a little bit more positive than I would have first thought, looking at the numbers overnight. Robert, great to see you this morning. Thank you very much indeed for updating us. Robert Lee joining us from Bloomberg Intelligence. Coming up, European inflation data continues to trickle in. We're going to discuss the read across with fixed income in the fixed income market with Carmagnac's Marie-Anne Allier. She is going to be joining us next. This is Bloomberg.
sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating. And then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
DOJ or other authorities.
We could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to the opening trade. About 40 minutes into the session, green on the screen in today's story. Look, we're still getting low volume, light liquidity as well, but you are seeing some outperformance in the Euro Stoxx 50, despite underperformance in the energy sector, tech outperforming. How much of this is reading through NVIDIA's results? How much of this is maybe just a little bit of a rotation trade? It also feels like showing up in this market. We're going to see how this all shakes out going into the rest of the trading session, certainly building up into the U.S. as well. But outside of the equity story and the NVIDIA story, we've also got some economic data that hit the wire as well. Spanish CPI coming in actually better than expected when it comes to that inflation easing. The expectation there was about 2.4% on a year-over-year basis. We came in at about 2%. The core, however, still coming in a little bit higher. Let's bring in our economist, Bloomberg's Anna Andrade, who of course covers the region and other parts of Europe as well. Anna, what has Spain been doing right here that perhaps other European economies have been doing wrong when it comes to tackling inflation?
Hi. So today we had great news from inflation. As you just said, inflation fell to 2.4% from 2.9%. Unfortunately, that's not so much to do what Spain has been doing right or wrong, because it was mostly driven by fuel. So energy contributions tracked on the headline measure, because essentially we had an increase in fuel prices at the same time last year, and this time around we had a decline. But actually, when you look at the core inflation, I mean, the harmonized core reading isn't available yet, but we actually think that the national measure that we got today actually keeps our forecast broadly on track, and we expect it to remain unchanged at 2.8%. So core is still sticky. And compared to the euro area, actually, Spain has been having sort of higher inflation than the wider euro area. Now, again, that's nothing to do with the underlying picture being worse, because core inflation is broadly the same as what we're seeing in Germany, but it has been more to do with dynamics in food and energy prices.
Yeah, and anticipation really building up for those German numbers that we get in about 18 minutes' time across the regions, and then the sort of number in the afternoon. And, of course, the Eurozone tomorrow. What are we expecting there? What are we expecting in terms of stickiness for CPI, particularly in Germany?
Yeah, so I mean, the story that we've seen today out of Spain's CPI numbers, so the sort of energy-driven fall, will be a common story across the main euro area economies. We're going to see that also playing out in Germany, although the fall will be closer to the ECB's target. And of course, that will also play out in tomorrow's euro area inflation number. And there we expect the fall to 2.1% from 2.6%. So this is good news. At least it gives good optics for the the European Central Bank, which is trying to loosen policy. But of course, if you go a bit deeper into that reading, we are actually expecting services inflation to be stubborn, so to remain unchanged at 4%.
Yeah. So the ECB is expected to cut. Is your assessment, though, that the ECB is correct to be cautious about how sticky inflation still is?
I think yes. I think there are several reasons for it to be cautious. Although I think maybe we can say that it's being maybe later in the year it will seem that it's being overly cautious. I mean, right now, what a sticky services inflation tells you is that you should proceed cautiously. It won't stand in the way of a rate cut in September, but there are other things that the ECB will also consider. And we got negotiated wages for the euro area for the second quarter as well this month, and that actually showed a fall in the headline measure to below 4% for the first time in a while. But actually, when you go a little bit deeper as well, and you look at the German wage data, the underlying picture, there was actually a tick up in the underlying measure. So there are these sort of signs in the data that give some caution to the ECB, but we think that at the same time, the ECB will also be considering growth risks because there are signs of ongoing weakness in the euro area. And I think it will also be a bit encouraged by, the dovish pivot, let's call it, from Fed's Powell at Jackson Hole. So I think overall, it's a rate cut in September. It's likely, but it will still continue to be a slow pace down in terms of rate cuts.
Another dovish pivot from Powell, I guess we should probably call it. Anna, always a pleasure. Thank you very much indeed. Anna Andrade joining us from Bloomberg Economics on the latest data out of Spain. Looking forward to the German numbers that are going to be dropping a little bit later. We'll bring those to you at the top of the next hour as we start that process. Let's get a take on this from Paris. Marianne Elliott, fixed income fund manager at Carmignac, joins us now. How do you see the ECB progressing from here? Signs of caution, it sounds of caution from people like Philip Lane. Do you think the market is overestimating how many cuts we're going to see from Frankfurt?
Well, for sure. For the moment, the market is expecting more than 3 cuts for this year, which is above what the governing council speakers are talking. They are talking about a quarterly cut, so no more than 2. The market is at 2.5. So. Yes, maybe the market is overestimated, the dovishness of the ECB and the influence of people like Schnabel. But all will depend. Inflation seems to be the old story of past years. Now everybody is looking at growth, labor market, and no more inflation, looking at what Powell said at Jackson Hole.
If I'm still worried about inflation, how do I protect my portfolio against it?
Well, because the market is very optimistic about inflation, when you look at five-year inflation swap or things like that, the market seems to believe that inflation will be at target in 2 years and will stay at 2% forever. So if you want to protect your portfolio, one thing to do is to buy break-even, to buy inflation-linked bonds, and to avoid very long-term rates, nominal rates, in a sense that if central banks are dovish, maybe you will have some inflation and the curve could steepen and, you can have higher long-term yield. So stick on the short term, buy break-even, buy inflation-linked, and wait for more, evidence of where the inflation, where the growth will go.
It's Crete in London. I'm curious how you're thinking about the peripheral credit, specifically because that Spain, Greek, Portuguese, even Italian bonds have outperformed, of course, French bonds famously, but by a massive margin in a dislocation that hasn't quite come back to earth yet. We're expected to get more news around a new French prime minister, a new French government in the coming, hopefully the coming week, if not in weeks to come. How does that shake out in terms of a trade that's already maybe served its purpose? What do you think?
When you look at peripheral, do you put France into the peripheral or outside the peripheral? That's now the big question.
You tell me.
Well, look at, if you have no history and you just look numbers as of today, you can see that Greek, Portugal, not Italy, but Greek, Portugal are doing great progress in terms of debt to GDP, which is absolutely not the case of France and not yet for Italy. But people that bet against Italy during the past 10 years, they lose money. You lose every time money when you bet against Italy. So I think the people are just thinking that, you know, you have more than 100 basis points every year when you buy Italian bonds versus German bonds. What could go wrong? Yes, it could, you know, increase by 20 or 30 basis points, but at the end, do you really think that Italy will go into the limbus? So my take is that probably France at 40, what it was before the snap election, was a bit rich, was too expensive. At 70, I have no clue. Maybe it can go to 80 or to 60. What is sure is that France have to reform that Greek, Portugal have done.
Well, talk to us a little bit about what you're watching there to impact that spread, though. And you compare it to Italy, where, and I love that you said that you would lose money every time you bet against it, but so much of the outperformance is coming from the fiscal. And I'm curious if you can apply that same logic to the French spreads as well. Is it still all about the deficit in France, or is this about stability in France?
Both. You have first that French government debt is probably the most liquid and the most easy to trade when you want to invest in the euro area. German Bund is not so liquid for example, big Japanese or big pension fund. You know, the French market is still the best liquid market you can find in Europe. So it has a price. It has some basis points are due to that. After that, yes, is deficit. It's all about deficit, and I'm not totally convinced that the announcement of a new prime minister in 1 week or 2 weeks or whatever will change, you know, the dynamic that we had since 30 or 40 years now in France. So for me, the spread has to go higher.
So it's continuation of status quo in France. Can we price out the political risk then? It sounds like Macron is trying to steer this towards a centrist government. Whether or not he'll be able to do that is, I suppose, another question. But can we at this point say that the politics are sort of irrelevant to the conversation, or is there still some surprises left?
Well, I don't see how they can find a government that will be able to do reform. You know, we have a split, you know, Assemblée Nationale with one-third, one-third, one-third. So every coalition will be made of, you know, no reform and nothing very harsh for the deficit, meaning that nothing will improve. So it's irrelevant in a sense that we know that whoever the next prime minister will be, we will probably have no big reform in the French deficit and the French deficit trajectory.
Yeah, and I want to talk a little bit more also about some of the data that we've been getting out of Europe. Obviously, we're focused today on CPI data, but if you look at the Bloomberg Surprise Index in terms of an aggregate of all the data we've been getting out of Europe, it's been really bad. We've been seeing a lot of surprises to the downside. Yeah. At what point does this sort of the growth side of things become a bigger concern for the ECB in their approach to rates?
For the moment, they didn't. They only, you know, point the wages and the productivity, in a sense, on the radar. They didn't speak very loudly about growth and the risk of growth. But obviously, if growth is decelerating too much, we know that it will have an impact in prices. Even though, if you look at the past year, where growth was not, you know, in Germany, we had a bit of recession. Inflation was still sticky. It's the service inflation that is sticky, and this part is again due about labor market. And as in the US, I think the labor part of the inflation data is more important than the growth part of the inflation data.
Well, Marianne Allier, Fixed Income Fund Manager at Carmignac, thank you very much for joining us from Paris this morning. So listen, we have a couple more We have a couple more headlines coming out from HSBC this morning, seeing that now we're having some management shakeup. The global head of wealth and personal banking is stepping down. This all in anticipation of the new CEO taking over in September. We saw also some stories out yesterday from Bloomberg about how basically there's going to be some cuts in terms of potentially a bloated management structure. Let's get more now from Jonas Bergman, who covers banking for us here at Bloomberg. So take us through the latest moves.
Well, yeah, today we saw that it was pretty expected that Nuno Matos, the head of wealth for HSBC, would be stepping down. He was one of the other main candidates for the top job, and now that we see George El-Hedry taking over as CEO next week. So Barry O'Byrne, the CEO of Global Commercial Banking, will step in as Global Wealth and Personal Banking Head for HSBC. Nuno Matos, however, will be staying on with the bank through 2024 and then go on gardening leave in 2025. So pretty expected that there would be some changes there as George El-Hedry takes up his new role starting next week. We also saw other changes. For example, the COO is stepping down, and they're doing a split of that role, and as well as the head of HR is leaving as well, with a new head appointed there. So some changes are on the way here ahead of George El-Hedry taking over for next week.
Jonas, as you say, some of this was expected. We are obviously going to see management changes when the CEO departs. Unsurprising. But does it tell us anything about strategy? Can we read anything into the names that are going to be taking over in some of these key positions?
Well, that's hard to say. Now, Barry O'Byrne, I mean, he's a veteran of, I think, 7 years at HSBC, but he does not have much of a wealth and personal banking, in his career. He's mainly spent it on the commercial banking side. So that is interesting to see. But it must be that he has clicked with the new CEO in some manner, because the global wealth, as we know, is one of HSBC's key targets for them going forward, especially in Asia, where O'Byrne will continue to be based in Hong Kong. So that's it's an interesting play to see what he can do with the wealth franchise going ahead with relatively little experience. He does have global experience, though, having led the commercial banking group, and also from his previous jobs has worked quite extensively across the world.
All right, Bloomberg's Jonas Bergman joining us this morning for that update on the HSBC shakeup. We thank you so much for that crucial context. And of course, we should bring some headlines here crossing coming out of China. They are saying they're finding dumping in EU liquor, perhaps that tit for tat that Ollie was just talking about previously in the program. However, alongside that, they're saying they will not be imposing an anti-dumping duty on EU liquor now. Now, let's get a quick check on how some of this is showing up in the stock. Pernod Ricard is the outperforming here this morning, higher by 8% among several in the drink sector rallying this morning.
Weakness in the numbers, softness in the numbers,
yeah.
But this is the headline. This is the headline that changes the game for everybody in this space at the moment. Serious fear that we could see maybe the drink sector being the target in response to maybe the auto headlines that we've been seeing.
Yeah.
This is...
Do you buy into this? I mean, basically the Chinese have said this chip is on the table. We're not activating it right now, but they're saying that it's there. So do you really buy into that?
The market clearly is. The market sees this as a positive.
Yeah.
Do you sell yogurt and buy drinks on the back of this? Is that the trade?
That's the guy trade this morning.
Maybe because maybe it puts the dairy story back on the table. But they're saying they won't impose anti-dumping duty on EU liquor. But as you say, Ollie, there is a now in there for now.
I'd like to see the statement on that. Yeah.
Diageo is ex-dividend this morning, and even it is up.
Yeah. And does that just mean we stock up on liquor? Not the worst thing in the world.
The question is, do you like Pernod?
That's a conversation.
That's Spike's opinion. I do. I love it, but I don't know about Guy and Critty.
Well, I'm sure Guy will discuss it in the next hour of program. That does it for the opening trade. We've covered a lot. Guy Johnson will continue with the Pulse up next. Stick with us. This is Bloomberg.
lot's happening on Wall Street.
That couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
NVIDIA falls after disappointing forecasts and production snags with its much-awaited Blackwell chips. Revenue actually doubled. Take a listen.
We're going to have lots and lots of supply, and we will be able to ramp starting in Q4. We have billions of dollars of revenues, and we'll ramp from there into Q1, into Q2, and through next year. We're going to have a great next year as well.
Jensen Huang, the CEO of NVIDIA, speaking to Bloomberg. HSBC unveiling sweeping management changes, including the departure of 3 top executives. This as we see incoming CEO George El-Hedry preparing to take the reins next week. Plus, inflation in focus. Spanish CPI cools to its lowest level in a year. A move that's likely to be mirrored across the Eurozone, allowing the ECB to continue to lowering rates. German regional data is the next to drop. Let's take a look at how we're performing in Europe this morning. The big surprise is that NVIDIA is down, but European equities are not. In fact, tech has actually outperformed this morning here in Europe. We've got a reasonable amount of green on the screen, but not up by a great deal. We're looking for the next catalyst. It seems that maybe NVIDIA was not that catalyst. FTSE's up by 0.2%. The DAX is up by 0.2%. So equities are rising. S&P futures are absolutely flat, which in some ways is a huge surprise. Nasdaq futures are a little bit more negative. We've got a bid back into the bond market. Euro dollar's trading at 111.14, softening up a little bit, but not by much. Crude is down just a touch as well. We do not have the volatility that maybe we would have anticipated post the NVIDIA numbers, because we did get a bit in its numbers. We're not seeing that rippling across into the rest of the world. Why? We're going to find out next. Maybe time to get the show started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning. You're watching The Pulse. I'm Guy Johnson. I'm in for Francine Lacqua. As I say, we are going to get data dropping throughout the next hour out of Germany, out of the regions, which will give us a clue as to what we are seeing in the bigger picture, the German picture, which will obviously ripple through into what happens in Frankfurt at the ECB. Brandenburg, August, CPI rises 1.7 year on year. Saxony, the number there, 2.6. So a fairly kind of mixed bag in terms of the year on years. I think I've got Bavaria at 2.1. pretty consistent with the kind of mid-twos number maybe coming out of Germany. We'll get Baden-Württemberg, we'll get North Rhine-Westphalia a little later, and then we'll get the wider number a little bit later on. As you can see, a little bit of weakness creeping through into euro-dollar on the back of this as we see some of this data coming through. It's going to be interesting to see just how much strength we see maybe in the wider number. What is interesting out of the Spanish data is that actually the expectation, certainly from Bloomberg Economics, is that we do see actually this being the low point, and actually the energy effect comes back in and pushes that number higher. Hess is coming through now at 1.5. That's actually significantly lower than previously. In fact, all of these numbers actually look really quite down quite sharply versus the prior numbers, which is why you're getting maybe that weakness creeping into the euro. The euro maybe flirting with 111. We've seen some recent euro strength. Maybe we're starting to back off that a little bit. Other stories that I want to focus on as well, that we are seeing now, that we are getting potentially a meeting between Xi Jinping, the leader of China, and the US National Security Advisor. We're going to see the Sullivan-Xi meeting. We think that's going to happen later on today. We're going to get more details on that, and we'll work our way through exactly what we're going to learn from that meeting and what details are actually going to be disseminated to the wider world. In terms of the single stock stories we're watching this morning, a little surprised that actually we're not seeing more of an NVIDIA read across, but look at NVIDIA. It has bounced back. You could argue NVIDIA is now only down 2.1 in the pre-market trading that we're watching right now. CrowdStrike is down, unsurprisingly, given what it's just said. Salesforce as well, some softness there. The Salesforce numbers are actually okay. They're going to focus on profitability, but just kind of the concern here is that we may be starting to see some weakness creeping in related to the AI story and a lack of demand for maybe Salesforce's CRM products, and that's being reflected in the stock this morning. But tech down a little bit in the States, but the expectation was that we were going to see much more, and that has not come through. The market seems to be actually largely shrugging its shoulders at the NVIDIA story, which is really interesting. NVIDIA's chief executive, Jensen Huang, reassuring investors, you could argue in some ways, by saying basically it's jammed tomorrow. We're going to get this Blackwell chip coming through later, and actually this is just a short-term blip in terms of when we're going to see that ramp coming through of that next generation of chips. He spoke to Ed Ludlow. Take a listen.
We're expecting Q3 to have more supply than Q2. We're expecting Q4 to have more supply than Q3, and we're expecting Q1 to have more supply than Q4. And so I think our supply condition going into next year will be a large improvement over this last year.
Robert Lee, senior analyst at Bloomberg Intelligence, joining us now to think about what we learned from NVIDIA overnight. The market's reaction initially was quite negative, but we've come off the back of that with a more sort of maybe positive take. What is your thoughts on how we should be analyzing these numbers? How bleak were they? How bleak was the kind of the issues around Blackwell? Because the initial reaction was negative, but as I say, that's being sort of tempered now.
Yeah, I think the fundamental outlook for the business remains unchanged and remains positive. I mean, they've got the market to themselves, and that will remain the case through to early next year and probably even beyond that. We got reassurance that this Blackwell product, although there is residual risk into next year, is getting back on track. And Jensen Huang said it could generate several $billion of revenue towards the end of their fiscal year. We saw some evidence that they're beginning to diversify their customer base, both geographically and also away from these very large tech platforms, the hyperscalers, the Metas, the Amazons, et cetera of this world. So those were the positives. But again, I think time and time again with NVIDIA on a stock that has performed so well, that's trading on such a punchy valuation, I think, there were expectations in the market that they could beat numbers by a more significant degree, and obviously that didn't happen. And although their guidance was a little bit above, again, the second derivative, if you like, the rate of incremental beat has been slowing down. I think also, just very briefly, if you take a step back, whilst the business is still reporting triple-digit percentage growth, the annual growth rate is slowing. A quarter ago, it was 260% or thereabouts. It slowed down to the 100% range, and going into the coming quarter, it's going to slow into the 70% range. So again, 70% is a great figure, but there is a marked slowdown happening.
In terms of the kind of the bigger picture around Blackwell, talk us through the manufacturing challenges that we're seeing with Blackwell. Is that something that I can extrapolate further out? Blackwell is going to be the next generation, and clearly it is complicated, and clearly it is a huge challenge to get the yields to where this company wants them to be. What comes after Blackwell? Do the challenges get greater in terms of the manufacturing story?
Again, you're making me think here. That's a great story, because one of the big advantages of Blackwell is the silicon real estate, if you like, has got bigger. It's a much, much bigger, more complex chip. But when you go through this fabrication or manufacturing process, it only takes one little error on that massive piece of silicon to effectively write off the whole device. So whilst you can sell these very large chips at a very high SP, the manufacturing risks and fabrication risks become much greater. So I guess the next generation, we'll have to wait and see, may involve even larger, more complex chips, or it could be a combination of smaller complex chips all networked together. But the problem they've had more recently is trying to connect and network these things together. Again, they're sort of at the bleeding edge of technology there. It's a non-trivial task to overcome. But, if there's anyone can do it, TSMC, their partner, with the likes of Hynix and NVIDIA together, that's a great team.
In terms of the optimism around the hyperscalers and the continued spend, do you buy Jensen Huang's optimism there?
Well, obviously, he's got the order visibility and the outlook, into middle of next year or so looks pretty robust because, as I've mentioned before, this is a bit of an arms race at the moment. Fear of missing out is a major driving factor at a point where these companies are really not monetizing to any large degree. But as I've said before, I think at some point, maybe into next year, we'll get a day of reckoning. If the monetization is not coming through at a fast enough rate, the risk is that they start to ease back on the capex, and that is a risk, a medium-term or 12-month plus risk for NVIDIA. And I think, again, that is something that people are beginning to focus on to a greater degree than they perhaps did 2 or 3 quarters ago.
Robert, thanks for the continued update. We really appreciate it. Robert Lee, Senior Analyst at Bloomberg Intelligence, on what is happening with NVIDIA. Just to update you on the pre-market, which kind of flips it at 9 London time, so we get a better idea. It takes maybe a little bit while to get the necessary volume to go through to give us a proper price. But as you can see, NVIDIA looks like it's down 5 and a bit in terms of the percentage performance. So we're trading down a little bit more than maybe the initial boards that we posted seem to suggest. Sophie Hoon, Senior Cross-Asset Strategy at BNP Paribas Asset Management, joins us now. Big tech has been a big driver of global markets. Get a little bit of a wobble from NVIDIA. How worried should we be?
I think it's actually the green light to rotate out of the Max 7 mega tech into the rest of the US equity market and into other regions such as Europe. So that's why also Europe is faring better this morning. And also into Asia, where the expectations are so low. And it's kind of like confirming the switch out of US exceptionalism into where the expectations are currently very low. The bar is very low for to surprise to the upside. So we think Europe and Asia are much more attractive.
But the macro story behind them isn't great. I look at Europe and I look at the data that's coming out of Europe at the moment. It doesn't exactly paint a positive picture at the moment. Yeah, Europe looks cheap, but Europe's looked cheap before, hasn't necessarily been a great buy signal.
I think if you look under the bonnet in terms of consumer health, the consumer balance sheet is much better. If you have a continuous fall of inflation going from here, the real disposable income is going to be boosted as well. And I think the fact that they have already started their cutting cycle, look at what's happening with New Zealand. The consumer confidence, in terms of business outlook, is now at a 10-year high. So we never know what could happen, but in terms of expectation, I feel like it's much better to rotate out of the US right now than continue to keep your crowded trades in the US.
So you think cyclicals are maybe the way to go? You think the consumer comes back? I was talking to Michael O'Leary at Ryanair. I mentioned this yesterday. He was saying that he thinks high rates have caused consumer weakness this summer, and he thinks if rates come down, that consumer weakness story will rebound. So you're confident that relationship will work fairly quickly. Monetary policy normally works with a lag, but you're saying we could see it quite quickly.
I think we could have a blip up in the next couple of months. It's kind of this late cycle trade that could basically work. I think what usually happens when if you look at the OECD leading indicator, we're currently into expansion mode. If you look at history transition matrices, there's a 50% probability that we end up in a slowdown in 6 months' time. What usually happens when you move from expansion into slowdown is that you're going to have a massive rotation within equity sectors. At the late stage of the cycle, cyclical tend to outperform defensive. I think in Europe, that's where you could have a bit of opportunity at this point.
Where does the cycle roll over, though? Can we park the recession risk? Is this a soft landing scenario?
I think at this point it's too early to fully reflect a recession into asset prices and portfolios. Having said that, if you look at how soft landing is currently priced to perfection, how central banks are also expected to cut back to neutral in a perfect way in a year's time, I think it's time to consider how much risk you want to put in portfolio, as well as what kind of risk.
If I'm worried about that downside risk, do I just buy bonds? Is that where I protect my portfolio?
So I think that's where the caveat is. If you look at the equity bond correlation, it's flipping negative. So it's raising the question on whether you're allowed to take a bit more risk because govies are back as a portfolio hedge and portfolio.
So I can feel more confident in my portfolio that if it goes wrong, I've got the hedge on the other side.
But the problem is central banks are already priced to go back to neutral. So for bonds to rally further, you either need a faster pace of cuts, so this jumbo 50 bips cuts, or central banks to cut below neutral.
But the central banks are priced to go back to neutral. That's the kind of soft landing scenario. If you get a hard landing scenario, they go below neutral.
But there's going to be a price to pay for further monetary easing, meaning that risky assets, given that global risk premia are broadly very tight, they are not going to be okay. So that's why I think it's too early to have a recession in portfolios, rotate out of the crowded trades, but sprinkle with cheap value trades that could benefit from the current environment.
Do I have to be brave to do that? Because if I've wanted my portfolio to outperform over the last year, I've had to have been in the US, I've had to have been in tech. Is it going to make, you must talk to a lot of people about it, does it make people nervous putting that trade on coming out of the tech story? Because that's been my alpha over the last year.
I understand it's been a lot of momentum playing, but if you look at what's being priced at this point, US exceptionalism is still embedded into US asset prices, which is not the case in Europe and Asia. And that's the region that tends to benefit the most as you're into a late cycle kind of setup.
How do I think about a weak dollar in my portfolio? What effect does that have? Because we're starting to see it come through. The euro's weakening up a little bit this morning, but up until now, the FX story hasn't had much of an effect, and it's now beginning to have an effect.
I'm short dollar. It's been all the sell side, like most of them are bullish dollar, especially with US election. I think this cycle is going to matter much more. I think the dollar smile that a lot of people talked about is going to be crooked this time around, because what's still embedded into US dollar is US exceptionalism, the resilience of US economy, as well as very sticky bullish bets still into the US dollar. So in the next 6 months, I think the dollar has room to fall further. And that's why having some yen, but having also some cheap high beta DMFX, such as the Aussie, Noki, the Swedish krona, really makes sense.
It's great to see you. Thanks for stopping by to see us. Really appreciate it. Sophie Hint, Senior Cross-Asset Strategist joining us from BNP Paribas Asset Management. Talking of asset management, let's talk about what is happening at HSBC. The Global Head of Wealth and Personal Banking at the bank is going to be stepping down. Nunos Matos is going to be leaving, along with the company's COO, John Hinshaw, and the Global Chief of Human Resources, Elaine Arden. The departures come, of course, a day before we get the incoming CEO, Georges El-Hedri, taking the helm of this bank. Some of this was largely expected. There was obviously an expectation that we're going to be seeing some of those that didn't become, like Nunos, the CEO, maybe stepping aside, but he's not going to go straight away. That's more of a story for maybe a few months down the road. We'll come back to that story a little bit later on. Coming up, we're going to take a closer look at what the latest data coming out of Germany reveals about the state of its economy and the Eurozone. We'll have that conversation next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
So as we've already indicated, we're starting to see some data coming out of the German regions, the States. The CPI performance that we're seeing thus far seems to indicate actually that maybe the data are going to come through softer at a national level. Certainly that seems to be the state indication that we're getting at the moment. The euro is under pressure as a result of this. You can see the drop that we saw when we started to get that regional data coming through. We're going to get the German data a little bit later on. What should we therefore anticipate? There is but one person to ask. Ollie Crook joins us now. Earlier joke, bad joke. Ollie, the indications are from the States that we're going to see a soft number.
Absolutely. So listen, let's just set up what the market was anticipating in terms of coming into this number from Germany. What we're expecting month on month is a 0% inflation print in Germany. That's going to come a little bit later, 2.2% on the year on year. What we're seeing from the regions is actually month on month, every single region had a negative print, i.e., I think that if I can make a bold call, we may actually get a negative print at the national level for Germany.
Month on month.
Month on month, right. Yep. And again, we saw also in every single category, whether it's month on month, year on year, in every single region, the inflation numbers have come down. So the story is intact as far as we can see. And as far as the traders are concerned, we're seeing the same thing. The euro session low. I mean, we were talking about euro at 112. We crossed through to 110 now. And we look at the market pricing for the cut in September. It's now in excess of 100% probability. So the market's feeling pretty confident on that.
Pretty confident on a 25 bip cut.
Yeah.
Maybe it isn't 25. Maybe we get more. I don't know. But certainly the suggestion is we are going to see that cut coming through. Let's talk about the car sector.
Yeah.
Vitally important to Germany, and we've had some data out from Europe which seems to suggest an ongoing shift away from gas-powered cars, but also away from EVs towards hybrids.
This is really interesting what we got from the July print, because we've been obsessed with the EV story for years. We, of course, we're talking about the years before that, the shortage, and there was a lot of pent-up demand for all of these cars. That has shaken out a little bit. In terms of the headline number in July in the EU, the deliveries were up 0.2%, very, very low. But as you say, when you break down the engine types, I mean, this is fairly remarkable in terms of what we've seen. EVs were down 11% in the month of July, gas cars down 7%, diesel down 10%. Hybrids up 26% in the month of July. So you see that rotation from all these different categories going into the hybrids. And again, when you see what that means in terms of the actual brands, I mean, Tesla was down 15% in terms of its deliveries in the month of July. Volkswagen down 2.2%. Stellantis down 5%. So again, this is a broader sector story. This is not just an EV story. This is across the sector. What is interesting is you did see a bit up. BMW and Mercedes both did a bit better in the month of July. You can see they're up about 2% and 3% respectively. What was interesting is that despite that and those sort of higher-end brands doing well, when you look at the Volkswagen numbers breakdown, Porsche down 15%.
That's amazing, isn't it? Yeah, really strong number to the downside. It's interesting, everybody laughing at Toyota for doing the hybrids. Maybe that trade has definitely come good. Ollie, thank you very much indeed. Ollie Crook joining us on what we're seeing out of Germany and also the auto sector across Europe. We're going to talk much more about what is happening with the macro story next. That is coming up. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
Or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Jake Sullivan, the US National Security Advisor, is in China, and we're starting to get a readout of a meeting that he has held with the Chinese Premier Xi Jinping. This is coming to us via CCTV, the Chinese state television. Xi indicating that he hopes that the Chinese and the US can find a way to get along. He says that China is striving to ensure ties with the United States are stable, hopes the US will take a rational attitude towards China, and that they can meet them halfway. This, of course, ahead of the US election, which is critical. We're going to talk more about NVIDIA next. This is Bloomberg.
Top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp-up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Approaching half past the hour. Welcome back. You're watching The Pulse. I'm Guy Johnson in for Francine Lackwell. Let me give you a quick update on the top stories we're watching this Thursday morning. Nvidia falls in pre-market trading. This after a disappointing forecast and production snags with its much-awaited Blackwell chips. Revenue more than doubles. HSBC unveiling sweeping management changes, including the departure of 3 top executives. This as incoming CEO George El-Hedry prepares to take the reins next week. Plus, inflation firmly in focus. The euro falling to its lowest level against the dollar in a week after data showed German regional inflation slowed sharply in August. Spanish CPI also cooling to a one-year low, though expectations there are that we're going to see that number bouncing back. Let's take a look at what is happening with Nvidia pre-market. We're down by 4.5% right now, keeping an eye on what is happening here and the ripple effects that come off it. Nvidia's chief executive, Jensen Huang, tried to reassure investors last night. He did so, A, on the call, and B, in an exclusive conversation with Bloomberg's Ed Ludlow.
We made a mass change to improve the yield. Functionality of Blackwell is wonderful. We're sampling Blackwell all over the world today. We show people, giving tours to people of the Blackwell systems that we have up and running. You could find pictures of Blackwell systems all over the web. We have started volume production. Volume production will ship in Q4. Q4, we will have billions of dollars of Blackwell revenues, and we will ramp from there. We will ramp from there. The demand for Blackwell far exceeds its supply, of course, in the beginning, because the demand is so great. But we're going to have lots and lots of supply, and we will be able to ramp starting in Q4. We have billions of dollars of revenues, and we'll ramp from there into Q1, into Q2, and through next year. We're going to have a great next year as well.
Jensen, what is the demand for accelerated computing beyond the hyperscalers and Meta?
Hyperscalers represent about 45% of our total data center business. We're relatively diversified today. We have hyperscalers, we have internet service providers, we have sovereign AIs, we have industries, enterprises, so it's fairly diversified. Outside of hyperscalers, is the other 55%. Now, the application use across all of that data center starts with accelerated computing. Accelerated computing does everything, of course, from the models, the things that we know about, which is generative AI, and that gets most of the attention. But at the core, we also do database processing, pre and post processing of data before you use it for generative AI, transcoding, scientific simulations, computer graphics, of course, image processing, of course. And so there's tons of applications that people use our accelerated computing for, and one of them is generative AI.
CEO of Nvidia, Jensen Huang, speaking to Bloomberg's Ed Ludlow. Ben Barringer, global technology analyst at Quilter Cheviot, joins us now to give us his take on all of this. Fairly negative market reaction, Ben. Is that the right reaction?
Look, it needs to be put into context. Nvidia has been beating its quarters by about $2 billion for at least the last 6 quarters. This one was only a $1 billion beat, both in terms of the revenue line and the guidance for next quarter as well. So this was the smallest beat in 6 quarters. Also, you've got to remember that it's beating by 1 or 2 billion, but now that's on a revenue base of 30 billion a quarter versus 10 billion, sort of 2 years ago, something like that. So it is a strong set of numbers, but it missed some quite high expectations.
there seems to be some concern around Blackwell and the production issues that the company has had. Is this just a tactical issue, i.e. we are going to get it sorted, we're going to get it sorted fairly quickly, and then we'll be up and running and actually yields will be good, and therefore the longer term story looks better? Or is this more of a strategic problem that building these bigger, faster chips is going to become more and more problematic?
Yeah, look, so for context, NVIDIA has been increasing the product cadence from 2 years to 1 year, right? So that's very complicated. And when you're ramping a new product, that's always going to have some issues. But the issue with Blackwell doesn't look like a big structural problem. It is, as you say, more of a tactical problem. It's going to mean a 1 to 3 month delay, something like that. And so that is not a worry. The other thing to say is that if there's people can't get hold of the Blackwell product, they can take the existing product, Hopper. So it might mean a slight increase in the existing product rather than the new product. We're not concerned. We have other concerns longer term, but the Hopper execution and the Blackwell execution problem are not major concerns for us.
And those longer term concerns are?
Yeah, so look, we worry a little bit about digestion by the big cloud providers, right? So historically, every 6 or 8 quarters, there's a period of digestion by those cloud providers. That can lead to slightly slower growth rates. We worry about supply of electricity, actually, to be able to build these data centers. You know, that is a constraint. And then obviously the big concern on the call last night was lots of questions around the return on investment on all this infrastructure investment. Jensen gave quite a long answer talking about all the different areas where AI can be used by businesses. So, you know, costs and optimization, AI agents, digital advertising, targeting, things like that, medical, logistics, and so on and so forth. But the exact numbers on return on investment are not known. And also, you know, do we get diminishing marginal returns from AI investment going forward? However, look, the current picture still looks pretty strong.
Just coming back to the digestion issue by the hyperscalers, when do they need to start to see a return in order to justify to their shareholders the level of investment that is going in?
Yeah, so it's very interesting, isn't it? They've made comments like there's a bigger risk in not spending than actually overspending. And that's because quite a lot of them have got quite fungible assets. Meta is a great example. It's got its Llama and its Llama models and all its new sort of AI focus, but it can also use AI and GPUs on its existing business. And they're seeing very, very strong returns there. So there are very, very high returns on investment from current digital advertising usages. But yeah, that's the problem. It's because it's such a diverse area, companies are still in the sort of implementation or even the planning stages of these AI projects. And so the returns on investment are still very, very uncertain.
Let's talk about competition. It feels at the moment as if NVIDIA is dominating the training space. When it comes to inference, though, that may be where the competition ultimately comes in. Is that how we should think about it?
Yeah, I think so. I mean, obviously, NVIDIA has got products and their products are used for inference. But yeah, that's right. You know, so products from AMD, their MI300 product is more a inference type engine. And then you've obviously got the custom silicon from companies like Amazon. So that's their Inferentia chip and so forth. And so, yeah, there's going to be a bit more of a workload by workload. You know, inference is quite different often because it depends on what you're getting the computer to do. Training, particularly for large language models, you know, that's very much the homestead or the area that's dominated by NVIDIA because of the chips, but also because of CUDA and the operating system. So yeah, we're still breaking out the market shares, but you know, companies like AMD have been extremely successful at taking market share from Intel, and there's a probability that they can take some share from NVIDIA, principally because the big cloud service providers want a second source. They don't want to be beholden to NVIDIA for both training and for inference.
Once that starts to unfold, do we get a shift in where the value lies within the AI space? At the moment, the value seems to be being captured by NVIDIA. How quickly does that evolve?
Yeah, that's exactly right. So with all technological sort of transformations, you often see the picks and shovels. I've done this long enough to remember the '99 bubble, and the picks and shovels, the Ciscos were the ones that were really doing the heavy lifting to start with, and then that starts to flow into internet companies, and we've seen that with companies like Meta and Google using AI quite a lot. Then you're going to have AI infused into software, and you've started to see that a lot from Microsoft and from Adobe and Intuit and so forth, and Salesforce, who also reported last night. And then you're going to start to see everyday companies talk about how AI is changing them. And we've already seen that from Walmart. So you get this gradual flow, but the place where they're really making money at the moment is definitely in the chip area, and that value shift will gradually shift into other areas, as I say. And then also the PC market. Let's not forget the PC market. AI PCs could become a sort of an ignition for that industry as well.
You bring up Salesforce CRM. Is that where the risk lies in this space? That the companies start doing their own CRM, they start doing their own software writing, they start using AI for that kind of technology, and it allows them to step away from the big providers. Where is the obvious risk at the moment that AI poses within the software space?
Yeah, I think it's actually to do with, I look at the digital advertising space, and that we're always focused on eyeballs and where eyeballs are going, because that is ultimately, what people can monetize. And one of the issues with AI assistants is that if you get people using an AI assistant as their sort of default, then they don't use the underlying interface of, say, Salesforce or even Google, right? They shift and they start to default to using an AI assistant, and that becomes, if you will, the operating system for all the other applications and infrastructure that you're using. And so companies like Salesforce maybe lose a little bit of their importance and value, because you're not really dealing with the Salesforce software, you're dealing it through an agent.
Ben, you talk about kind of remembering what happened 99 into 2000. Any similarities?
I mean, there are some similarities in the sense that you've got this big infrastructure build, you've got some lofty valuations, but quite a lot of these companies, are very, very profitable, have very big moats, are very well managed and very agile. I keep talking about Meta, but it wasn't so long ago, 2-3 years ago, that Meta faced some very, very profound problems, and the agility with which they were able to navigate that has been, very, very commendable. So yeah, there are some comparisons. We watch that very, very closely, though. The big issue is growth. These multiples are justifiable if you continue to get the levels of growth that we think you can get. But once that growth starts to derate, maybe in 26, or we get a cloud digestion period, that's when the multiples can start to contract.
Ben, great stuff. Thank you very much indeed. Ben Barringer, Global Technology Analyst, joining us from Quilter Cheviot. Thank you very much. Coming up, we're going to discuss the latest on the US-China talks. Senior White House official Jake Sullivan meeting top military figures. We're now getting a readout from his meeting with the Chinese President Xi Jinping as well. We'll bring you up to speed with all of that next. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The Chinese President Xi Jinping has told top White House official Jake Sullivan that he hopes the two nations can meet halfway. The two sides are seeking to stabilize, of course, ties this ahead of the US election, which is taking place in November. Joining us for now, an update is Bloomberg's Jill Desis. Jill, we're getting a readout from CCTV. What do we make of what we're hearing so far?
Well, look, Guy, as you just said, we're getting some initial Chinese state media reports on this meeting between the National Security Advisor, Jake Sullivan, and Chinese President Xi Jinping. We're really just seeing some very high-level comments right now about the importance for the continuation of bilateral ties between the world's two largest economies. Xi stressing there the need for stable U.S. relations. I think that's all pretty expected here because really, Guy, the importance of this visit from Jake Sullivan, I mean, this is the first time that the National Security Advisor from the United States has visited China in the last several years. He's already had some really high-level meetings with others in China, including a really top Chinese general of the People's Liberation Army. That's the Chinese major defense forces there. Also, Jake Sullivan's been meeting with Wang Yi. That's the top diplomat in China. All of this is really about stabilizing the U.S.-China relationship during a really, really critical time. We've seen relations sort of sour, get a little bit better, but ultimately still remain strained over the last several years under both the Trump administration and now the Biden administration, and we're heading into a very uncertain time period where you've got this U.S. presidential election just a couple of months from now. We'll have to see what ultimately happens with the administration come into next year.
The Chinese are making very senior people available to meet with Jake Sullivan. What should I read into that?
Well, look, Guy, I think that, from the China perspective here, it's obviously very important that they keep ties with the United States stable, particularly, as I said, going into this election. So, look, you've had, over the last several years, the U.S. really, really kind of tighten the screws on China and Beijing in a lot of ways. We've seen a lot of, major tariffs and other punitive measures put on Chinese goods. We know that the U.S. is, working very, very hard to kind of curb a lot of Chinese developments in advanced technology and manufacturing and such. I mean, we've seen this in the semiconductor industry, in electric vehicles in particular. From China's perspective, I mean, the economic growth in China is certainly slowing down somewhat. They've kind of lost a lot of leverage that maybe they would have otherwise had to kind of push back against some of these curbs. From the China perspective, it kind of behooves them to make sure that ties remain stable, particularly if there's going to be any uncertainty about what's happening once the U.S. presidential election takes place.
So what message is Jake Sullivan going to take back to Washington with him?
Well, I think at this point, what they're ultimately trying to establish here is maybe some kind of bilateral meeting between both Xi and then, current U.S. President Joe Biden going forward. They've one of the big deliverables that it seems kind of came out of this already is some kind of promise that the two leaders will have a talk in the coming weeks. It's not really sure what form that might ultimately take, but then ultimately we'll have to see if Biden, who's concluding his term, he's not running for.
I think we may have lost Jill Desis. Let's assume that that's probably correct. Usually when the screen goes blank, you can assume that that probably has happened. So let's move on and talk about some of the geopolitical stories that we are watching. Israel has launched deadly raids into the West Bank. It's done so to try and combat what it says is terrorist activity. The raids are the latest surge in hostilities since the start of the war in Gaza. Palestinian officials say 10 people have been killed, whereas Israel says it killed 5 militant targets. The US is warning of an environmental disaster as an abandoned oil tanker in the Red Sea appears to be burning and critically leaking. The ship was carrying 150,000 tons of dense Iraqi crude when it was attacked a week ago by Iran-backed Houthis. We'll continue to monitor that story. We're also going to come back to the inflation story next as well. We have seen data out of Spain and Germany this morning indicating that inflation is cooling. Are both countries sending the same message on inflation? We'll discuss what it's all going to mean for the ECB next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Was going to keep reading World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
I don't want us to be in a situation where we cut and then we have to raise rates again. Like, that would be a very bad outcome. It would really undermine all the confidence I was talking about people have.
Not everybody's as convinced as Powell is that everything is under control and we can declare victory. Atlanta Fed President Raphael Bostic remaining cautious about the timeline for cutting interest rates in the United States. He is definitely at the hawkish end of the spectrum when it comes to what we see on the FOMC. You probably saw it just before we went to break a few moments ago. We have now seen the German DAX surpassing the record closing highs. We've got an intraday high right now. Let's see whether or not we can close at that high. Obviously, that is the key metric by which we will judge this. But it's worth noting that that is happening on a day when we see significant weakening in German regional CPI data. We saw that at the beginning of this program. We have seen data coming down pretty much across the regions. And we are seeing a softening that is greater than anticipated, which takes us towards maybe a set of data a little bit later on in terms of the national numbers, which are going to deliver a similar outcome. You can see that the euro has weakened significantly on the back of this. We are now trading with the 110 handle, 110.84 on euro dollar. So some dollar strength coming back into the mix. The market is now pricing in near certainty that we are going to see a 25 bip cut when it comes to the ECB at that September meeting. Is that the right call? Jana Randau joins us now to give us her take on all of this. Jana, walk us through the market reaction, your reaction to this German regional data. Does it confirm that the ECB is going to be cutting?
Yeah, so what we're seeing out of the German states today is that inflation, or the inflation trend, is slightly weaker than expected. So we're seeing declines on the month, which suggests that the economist estimate for an annual rate of 2.2% in August might actually be on the strong side, and there might actually be a downside surprise. So slightly weaker than expected inflation in Germany, and of course we've seen that in Spain this morning already, and then also for Italy, for France, and for the Eurozone, we do expect a retreat in inflation in August. Now, does that cement expectations for a cut in interest rates from the ECB in September? Probably, but that doesn't mean that the ECB is ready to declare its fight against inflation over, because we've also seen some other indicators that are speaking a slightly different language. And also, of course, policymakers have been cautious in saying that the road to 2% inflation is bumpy, so there might be setbacks in the months ahead. Inflation might tick up again. And that was the clear message from Chief Economist Phil. Yes.
Yeah, precisely, the Lane comments. Very cautious. How do they weight the CPI versus, say, some of the wage data they're watching as well? How do they kind of relatively see these various data series that they're watching?
Yeah, so the one thing that President Lagarde actually left us with going into the summer break was saying, look, we are dependent on data, but we're not dependent on individual data points or one individual data point. So inflation is one element that feeds into the ECB's assessment. You mentioned wages. They are coming down. We are getting another one in the coming months. And then, of course, projections. That's the most important thing.
Jana, always a pleasure. Jana Rando joining us out of Frankfurt. That wraps up this program. We're going to continue the conversation. It is time for the brief. Manus Cranny is in New York getting ready. He will be joining you very shortly as we continue to count you down to the opening of NVIDIA a little bit later. This is Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning from our global headquarters in New York. I'm Menace Graney. You're welcome to Bloomberg Brief. Let's set your agenda. Not impressed. NVIDIA drops. The outlook fails to live up to those lofty expectations. CEO Wang efforts to address investor concerns.
The demand is so great, but we're going to have lots and lots of supply, and we will be able to ramp starting in Q4.
Another step forward in U.S.-China relations. President Xi meets with National Security Advisor Jake Sullivan for the first time. And it may be time. Bostic adds to the Fed speak time chime, but warns more data is needed to support a September rate cut. You are an incredibly hard audience to please. A guidance at over $32 billion in revenue, several billions in Blackwell chips, and still the market was taken down. Let's have a look at the NVIDIA stock price. After hours, we dropped by 8%. This morning, we are down 4.25%. The expectations are essentially that what have been underwhelming for this market. And a $50 billion buyback wasn't enough. Benchmark that to Google, benchmark that to Meta, and it is decidedly underwhelming. This is about whether the hyperscalers can continue to deliver hyperventilation to the valuation of NVIDIA. By the way, the Xetra DAX has just traded through and above its record closing level. So new record on the DAX this morning. That's something else to keep in mind. As you can see, 18,864. We'll talk more about NVIDIA through the morning. We have UBS joining us. We've got a host of thoughts to come through from HSBC as well. So we're flat on this overall at the moment. As I say, there is a narrative out there that you've got this almost a disinversion on the curve. You can smell it. Is that more ominous than the inverted curve than you have had, meaning deeper and harder cuts perhaps to come? Iron ore up by 0.7%. There's an irrationality to the price of iron ore being above $100. And the Chinese actually took to the national journals to say so, to say to the market. And this, as UBS cuts the growth forecast for China, not just for this year, but for next year, 4.6% for this year, and to 4% for 2025. We'll talk to Mark Hafley in just a moment about that. Look, NVIDIA is the only story in town. It's failed to meet those investor expectations. But the CEO, Jensen Huang, sat down with Bloomberg exclusively to talk about the future.
We're going to have lots and lots of supply, and we will be able to ramp starting in Q4. We have billions of dollars of revenues, and we'll ramp from there into Q1, into Q2, and through next year. We're going to have a great next year as well.
Okay, let's bring in Robert Lee, our NVIDIA senior analyst at Bloomberg Intelligence. The guidance, I mean, if you, by any measure, this revenue was pretty stunning, but it seems to be that the market is leaning on the fact that it wasn't as blowout a guidance on revenue and profit as we've had in previous quarters. Is that a fair benchmark to take the stock down by 8% after hours last night?
Okay, excellent question. Given that the stock sort of rallied after the production disruption we saw several weeks ago relating to Blackwell, the stock had almost rallied back to its prior peak. So as you know, it's all about risk reward and what's expected by the market. So I guess the fairest way to sum it up is maybe it's growth, Jim, but not as we know it. So these are great numbers, but the second derivative, the rate of incremental growth, is easing. So for example, if you looked at the revenue growth they delivered this quarter, it was about 120%. So that's a substantial number, isn't it? But then last quarter it was 260%, and coming into the coming quarter it's going to reduce to the 70% range. So there's a relative slowdown, and as you sort of said in your intro, the rate of incremental beat is also easing. They did beat, but the margin of the beat was lower than in previous quarters. So I think fundamentally the story remains intact, but as I think I've mentioned previously, there are these clouds on the horizon, one relating to Blackwell, one relating to the rate of monetization within their cloud customers.
I like that. It's growth, Jim, but not as we know it. Well, perhaps not as we were baying for. Jensen Huang sat down with Bloomberg. He was trying to deliver this medium-term outlook that was optimistic, several billion in terms of Blackwell. As you said, we've made up a lot of that. Your takeaway from his conversation with Bloomberg?
Yeah, I mean, I agree with him on fundamentals. The long-term fundamental outlook for this company has not changed. They've got effectively the market to themselves. They're an effective monopoly at the moment. Assuming they execute well on Blackwell, then they will maintain and, arguably extend their lead over the likes of AMD and Intel, etc. However, there is this execution risk, I think, that people need to bear in mind on Blackwell still. Whilst they've overcome these short-term difficulties, and this product can deliver a few billion of revenue or so towards the end of their fiscal year, it's a really difficult thing to ramp these things up to volume. So I think there still is residual risk into next year. And again, I think the market is taking that on board. This is a highly complex chip to fabricate. They're not fully through the risk on that yet. But the near-term outlook, again, demand is outstripping supply. The outlook in through the rest of this year and into the early part of next year, they've got the market to themselves. So, it looks strong.
I just wonder what this means for the next story, which is OpenAI, we understand, are going to be back in the market, trying to raise several $1 billion. The valuation is estimated around $100 billion. Coming to the market at this time, still when there's such dominance in the AI narrative and that we're in the foothills of that growth story, how easy or difficult do you think it's going to be for them to make this fund, to raise this money? Will people be salivating to get chunks of OpenAI?
Okay, looking at some analysis we've done on private equity deals in the China market on the AI front, I mean, there's been a considerable slowdown. Some of that is caused by rates, and obviously it's much harder for VCs, PE companies to raise money these days than it was several years ago. So I think that's one factor that will, potentially go against them. But at the end of the day, if you're looking to invest in AI, aside from NVIDIA, on the software side, on the generative AI side, what other companies are there apart from ChatGPT and OpenAI? So I think, that is a natural focus point. And I would imagine, given their relative market dominance, that should still attract a lot of interest from investors at the moment.
Okay, Robert, thank you so much. If you just look at the energy needs that's needed to run some of these GPUs, maybe it's just time to look at the alternative infrastructure across the world in terms of electricity, the vicarious trade. Robert, thank you very much. Robert Lee, on the results from Jensen Huang's NVIDIA and OpenAI. My guest this morning is Mark Haefele, CIO at UBS Global Wealth Management. Mark, good to see you this morning. It's almost as if this market has lanced a boil. We were talking about NVIDIA, thinking about NVIDIA, building up to this. Here we are, pretty good, magnificent results. The guidance, some would say, was a little bit light. How cathartic is this for you? What's the opportunity when you see an 8% drawdown in a stock? Just set your stall out on this cathartic moment. We got there.
Well, Manus, your intro once again was kind of a tour de force. It was poetic and also perspicacious in laying out kind of the issues around what's the future of AI, what's going on with U.S.-China relations, and what's going on with rates. And I think, we're in a little bit of a Gordian knot here on unraveling those 3 points. I think for us, the longer-term picture for, say, earnings globally with MSCI World equities or the U.S. looks strong. The longer term demand for AI looks strong, but we've got some bumps in here around kind of near term chip production, what's happening with potential export controls on chips and U.S.-China relations, and then of course the interest rate picture. So that's why we see some volatility in the near term, even with a stronger long-term picture.
That volatility, it's interesting. You talk about volatility, perhaps cyclical and geopolitical headwinds. Can we talk about the review by the House, the UBS House on China? 4.6%, I think, is something which is reasonable. Other houses have gone there, but you're going for 4% as a house, your economics department, 4% for next year. Can you just lay out what the reverberation of that is? Because we don't talk a lot about China growth here when I'm based in the United States of America until it's a shocker, and then it suddenly takes a new meaning.
Well, I think that view from the economics department has, something to do with maybe we were expecting a little bit more this summer in terms of political support for the economy and still working through the housing issues. But we may still get that this year, after we get the election and a sense of how that's going to play out in the United States. That might be a time to use some of the dry powder when that picture is a little clearer. So I think it's stay tuned, but given the information we have, we got to call it like we see it.
Okay, we'll come back to your narrative around the U.S. election in just a moment. Let's both just listen to what Raphael Bostic had to say to the market yesterday. He's the third wheel to speak about the timing of rate cuts. Let's listen in.
I don't want us to be in a situation where we cut and then we have to raise rates again. Like, that would be a very bad outcome. It would really undermine all the confidence I was talking about people have.
Mark, that's their worst nightmare, to have to do a U-turn. When I look at the trajectory of 10-year yields, 2-year yields, the overall movement, we've had two significant legs lower in yield. CPI, July, and then the growth skirt. So we've had a pretty good run down on yields up in price. So the bar is high, I would say, to a disappointment from the Fed. But that bond market, some people are saying to me, looks rich.
Well, look, we think that the Fed is going to see what the market is pricing in. We think that unless we get further weakness in the data, we're going to get 25 basis points in September, probably another 2 cuts this year. So, we think that picture is on track, and we also think there's a soft landing. And if you start to get Fed cuts and you don't go into a recession, that is usually a very good setup for stocks into the next 12 months.
And that's pretty much your base case. I mentioned the curve could smell a disinversion. We did it on August the 5th. I think it's a tantalizing way to look at the curve. Many bond traders might disagree with me. But how important is that, Mark? If it does disinvert, what does that signify to you as a global wealth manager?
Well, I think that, when we look out kind of longer term and talk to our clients, we say, hey, have the dynamics changed? Does the debt in the system, the larger forces, demographics, debt, how does that change what's going to happen at the longer end of the curve? And does that create a need to change your asset allocation, maybe rely less on bonds going forward and more on equities or privates, for example? So it's definitely something we think about. But at the same time, I think there's been a lot of false signals in maybe in the bond market recently, as really the story has been, why did we have this inflation and what are the forces that are bringing it back down again?
And it may well be that China delivers some disinflationary. Time is always the thing that kills us on this show. Very quickly, you say that the probability of a Harris win is rising, but you're advising, like, don't run to the hatches and start changing things in the portfolio. But you do have 2 suggestions on hedge for risk in the back quarter. What are they?
Well, there's lots of hedges, but I think we see gold as as still a great hedge, and also the Swiss franc here, because we think there's going to be some dollar weakness. So those are the two I would point to today.
Okay, well, that dollar has certainly taken a smash over the past 6 weeks. Mark, great to see you. Good to get your thoughts this morning on Bloomberg Brief. That's Mark Haefele, UBS Global Wealth Management. Other stories trending on your Bloomberg terminal this morning. This is what we got for you. Telegram's CEO was charged in France for complicity in drug trafficking and other crimes on the messaging app. Bail is set of €5 million. The 39-year-old Russian entrepreneur, his lawyer says it's absurd to claim that the platform or its owner is responsible for the crimes. Nippon Steel plans to invest an additional $1.3 billion at plants operated by U.S. Steel. It's an effort to secure the union's support for the takeover bid of an American company. Both President Biden and former President Trump opposed the Japanese company's $14 billion acquisition of U.S. Steel. Huawei's revenue grew for the 6th straight quarter after its smartphones gained market share in China at Apple's expense. The Chinese telecoms giant posted a revenue of around $34 billion in the June quarter. That's up 33% on last year. Coming up, National Security Advisor Sullivan wrapping up his China trip with a meeting with President Xi Jinping. More on the meeting. Context matters on Bloomberg. Good morning.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Or other authorities.
Could face bigger challenges next.
It was going to keep bringing World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and
beyond. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
It's rare that we have the opportunity to have this kind of exchange. And given the state of the world and the need for us to responsibly manage the U.S.-China relationship, I think this is a very important meeting.
The U.S. National Security Advisor Jake Sullivan speaking after meeting with the top Chinese general. Now, following that, his very first meeting with President Xi, the two nations seek to stabilize diplomatic ties. Jill DeCease is with me. Jill, it's as if the big guns were brought out, quite literally. A very important meeting is what Sullivan described his military meeting. But then he sits down with Xi. How significant is this piece of theater in terms of U.S.-China relations and the direction of travel that China is trying to embed?
Manus, this is a pretty big deal. Look,
Jake Sullivan got quite a few really substantial meetings out of this 3-day trip to Beijing. This is the first time that a U.S. National Security Advisor has actually been to China in, the past 8 years or so. So, I mean, already that's a pretty significant development. And then he got, hours and hours with the top diplomat in China, Wang Yi. He got that big sit-down meeting that you just mentioned with that top general for the People's Liberation Army. That's China's, big defense force. And then, of course, as we're just seeing now, we're still getting lines out of this meeting with Xi Jinping. So it does seem like, from both sides here, there's a lot of desire to kind of make sure that the U.S.-China relationship is stabilized going into the end of the year. Of course, Manus, this is all happening just a couple of months before the U.S. presidential election, where there's a lot of uncertainty over whether it's going to be Kamala Harris, replacing Joe Biden at the top of the ticket for the Democrats, or whether it's going to be a return to the Donald Trump administration. He's obviously the Republican candidate there. So I think at this point, it's really, the Biden administration, it kind of seems, wants to future-proof relations between these two countries here. We'll have to see whether or not that's successful, but certainly it does seem like a lot was accomplished in terms of those sit-down meetings on this trip.
I think it's interesting. There is a line from the Chinese side. I mean, the Chinese media, I love the story that we've written, which is, praising the fact that most of the entourage with Sullivan actually spoke Chinese. But then if you look at what the military general had to say, the reunification of Taiwan with the mainland is, and I quote, the mission and the responsibility of the military. That's the Chinese Defense Ministry. That's their statement. So it's not as if, the points of real angst have gone away. I suppose what the world is going to be asking, certainly what we're going to ask here in the United States as we go towards the election, is what's the potential of a Biden-Xi meeting? If Sullivan sat down with Xi now, does this pave the road for what? A virtual meeting, a meeting somewhere halfway around the world? Where are the potential moments? We talked a little bit about it yesterday, but do you think it's a more real lit probability now?
Well, yeah, Manus, I mean, at this point, it looks like the two leaders, Xi and Biden, are at least going to be talking maybe by telephone or some such. There was the big deliverable that came out of the meeting between Jake Sullivan and Wang Yi yesterday. So they are going to have some kind of a talk there. Whether that actually turns into maybe an in-person meeting down the road. I mean, look, Biden and Xi will actually have an opportunity to meet, by the end of the year. We've still got these big ASEAN conferences that, maybe they'd potentially both be at, and then they could potentially have some kind of a meeting, sideline meeting or sit-down meeting there. So yeah, it does seem fairly realistic to expect that that's maybe what we're laying the groundwork here for. I do want to emphasize here, Manus, that whatever there's obviously a lot of daylight between the U.S. and China on these major positions involving, Taiwan, military actions in the South China Sea, but it does represent something significant that these high-level military talks are actually taking place. I mean, it wasn't that long ago, just about a year and a half ago, where the two sides weren't talking whatsoever. So that is a pretty significant development there.
No, absolutely. A 3-day significant progress. Jill, thank you very much. Jill DeCease. And one market which is reacting more so to dollar weakness is the yuan. Just take a look at this. The yuan gains. It's erased its losses for this year, for 2024. It's interesting that this is a break of 710, and this is critically important according to Barclays. They say it could push more FX conversion. Chinese exporters may be prompted to convert more dollars into yuan if we break this level. Yuan strength on the day.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Pages from around the world. These are your main headlines. First up, Financial Times leads with Goldman Sachs becoming the first U.S. bank to successfully challenge the Fed over its stress test, winning the bank a cut, small, but a cut in its capital requirements. Next up, the head of HSBC's wealth unit has left the bank weeks after missing out on the CEO role. After spending 9 years at the bank, Nuno Matos headed the wealth management, the personal banking divisions, accounting for 41% of the group's revenues last year. And the Tesla CEO, Elon Musk, has hired a Republican advisor with expertise in the field of organizing to help steer his political work. The move suggests that the world's richest person is preparing to become more involved in getting out the GOP vote. Coming up, HSBC's Frank Lee joins me to dig into the NVIDIA numbers. Just how impressed or unimpressed was Frank with NVIDIA?
First of all, global trade, which had adverse consequences that we're learning about to this day, still unleashed an enormous amount of gain for humanity. And with the rise of global trade became the rise of information sharing around the world, which rapidly accelerated the trajectory of mankind. I mean, of note, the Chinese, for example, are leaders in solar. They're leaders in EVs. They're leaders in a number of emerging technologies. In a world which is more splintered, we'll see the gains that the Chinese have achieved in these important areas not shared by the Western countries. And conversely, the United States is a clear leader in AI, along with a number of the European countries. And those gains will not be shared with China and the countries in its sphere of influence. So it's a very clear-cut loss for all of humanity when we have the severing of ties between our countries.
On a practical level, is it getting harder to manage the risks you face?
I think that one has to be aware that there are more tail risks that are harder to ultimately manage.
Our global headquarters in New York. Welcome to Bloomberg Brief. I'm Menace Cranny. Let's set your agenda. Not impressed. NVIDIA falls after the outlook fails to live up to lofty expectations. CEO Huang efforts to address investor concerns. Another step forward in U.S.-China relations. President Xi meets with National Security Advisor Jake Sullivan for the first time. And it may be time. Bostic adds to the Fed speak time chime, but warns more data is needed to support a September cut. A very good morning to you. It is all about NVIDIA. We have made significant progress from the nadir of the aftermarket last night, down by 8% in the aftermarket, down about 4.5% on the open. So we are bouncing from the lows as the market reflects on NVIDIA's guidance. Was it that underwhelming? $32.5 billion for the next quarter. It's perhaps a little bit at the lower end, not near the extremes of $37 billion. But the known unknowns, one could say, in terms of guidance and in terms of product, are becoming a little bit clear. Overall, the markets this morning, as I say, NVIDIA is bouncing from the lows, and there are ramifications for that. You've got the NASDAQ up 0.25%. We can look at the cross-chip market in just a moment. 210s, it's, again, almost at the point of disinversion. Moving slightly further away from it, how ominous would a disinversion be? Would it mean deeper and harder cuts? A little bit contrarian to the conversations that we're having overall. Iron ore is up by 0.7%, to such an extent, breaking $100, that the Chinese officials have taken to the official media to say 10% in 10 days. There is an irrationality to the price of iron ore as UBS cuts the growth of China to 4.6% this year and 4% next year. I mentioned NVIDIA earnings. You'd have heard a little bit about them. And we're talking about the scale of the post-earnings decline. Still, the hopes are high for the chip maker.
I'm not concerned. I think if you look at NVIDIA, they still control this market and will continue to, I would say, dominate this space over the next 3 to 5 years.
Delivering chips at this rate, at this scale, is fantastic and unprecedented. I don't think there's much of a revenue issue here, of a growth issue here. I think the little bit of a pushback is probably more around the margin situation.
That type of growth isn't necessarily realistic or sustainable in the long term. Two, it's not necessary in the long term either.
At the end of the day, we still sense enormous and urgent demand across the board, and that really mitigates, in our view, the risk of a pause in shipments as customers wait for the next generation of chips to be available in volumes.
HSBC's Frank Lee is with me. He has a buy rating on the stock, a price target of $145, and this is what he says. Overall, the results and the guidance were in line with our estimates. Not bullish enough to see a major beat on the results or guidance, as we have seen in previous quarters. Frank, good morning to you. It seems as if the worst knee-jerk reaction has passed. Down 8%, we've come back off the lows. This is about the guidance. It dipped relative to the first quarter, and there seems to be an irked reality around the product delivery on Blackwell. There's a lack of detail on that. How irked are you?
Sure. I think, going into this quarter, about a couple of weeks ago, there already was, a lot of noise in the supply chain about some roadmap changes and potential delays on the GB200 platform. So I think that was expected. But we also highlighted that, they would be able to make up a lot of their revenue shortfall from the Blackwell in the second half this year with the H200, with the Hopper. We expect a very strong demand on Hopper, as well as the H20, which is primarily in the China market. And that seems to be what NVIDIA was able to deliver. They did highlight, they do see some revenue opportunities in the fourth quarter for Blackwell, but I think we'll have to continue to monitor. I think the difference is that this time the numbers were good and solid, but perhaps just not strong enough in terms of magnitude to beat to significantly drive much further upper revisions from where we are now.
In the break, I said to you, we are far from maturity, and I think we're far from maturity in AI. We're far from maturity in the evolution of many of the hyperscalers, and we're far from maturity of NVIDIA. But you would say it is also about product diversification. And give me your read on that. What exactly do you mean about that going forward?
Sure. So as we go into next year, I think one of the things that we need to watch is the roadmap of NVIDIA. For the last 12 to 18 months, they have been able to successfully keep pushing a significant hike in their ASP with their roadmap almost every 6 months. That cadence does seem to be slowing down somewhat. A lot of the new product launches that we expect into next year, they have these, B200A, GB200A. These are actually a bit more lower end spec. In a way, it enhances the TAM opportunity for NVIDIA, potentially to more customers. But on the other hand, it also means that the ASP step up that we've seen probably will start to moderate next year. So I think the key for 2025 next year will really be a function of how much unit growth they can continue to deliver and surprise in the market.
What about pricing power? I mean, one of the other points of discussion was around margin, and obviously pricing power is an incredibly important component part of that. How do you see the trajectory on pricing, let's say at the upper end of the chips, because that's where it's the upper end, the more expensive ones, the Blackwells, and indeed where we are at the moment. So what about pricing? What's the outlook there?
Yeah, I think the pricing environment will be fairly stable, but I think given the roadmap that we're seeing coming through, and especially the changes they've made at the beginning of August going into next year, I think what we're going to see more likely in the second half next year is actually a lower end price point in terms of the spec performance compared to what we've seen. Now, it doesn't, I think there could be a temporary transition because in 2026, you have the Rubin architecture that's coming. That potentially could be the next big catalyst to drive the ASP higher from where we are today.
The buyback that they announced, $50 billion, some has been written about, they only did about $7 billion in the previous quarter of actual buybacks. They announced $50 billion, but if you benchmark that to Apple, Apple was $110 billion. Google announced $70 billion in 2023. Is this a criticism of the use of capital? Is it underwhelming, or is it at the money for you in terms of where NVIDIA is?
Yeah, I mean, I think, a lot of the investors who are looking at NVIDIA aren't necessarily looking at for the buyback. They also talked about dividend, which is insignificant. I think, basically buy NVIDIA because it's the front runner in AI. It's been a growth stock. So I think that will continue to be the key focus for most investors is what that growth momentum will continue to look like over the next year.
In terms of the buy rating that you have at $145, is that a conservative outlook on this stock?
Yeah, I think it's what we see, a fair value in the scenario. I think if there is another step up in the next couple of months or the next 1 or 2 quarters where we see a huge leg up in terms of ASP and roadmap, and that's a different scenario. I mean, I think right now, based on what we understand, what the scenario, what the roadmap looks like, what the scale is, I think that's to us that seems as a reasonable valuation and a reasonable target price.
And often when we catch up with analysts, I mean, there's very few people out there. 90%, 66 buys, 90% of the market is a buyer of this stock. What is the single biggest risk for NVIDIA?
Yeah, I think the biggest risk is, the positioning, right? Everybody owns the stock. What we saw was a correction a couple of weeks ago because it was heavily owned. And so in some ways, it's become kind of a bellwether of the overall market. So these are going to be issues that could drive some volatility into the stock. So I think that is one concern. I think the second thing is just continuing to look at see how the roadmap continues to play out. We do see that they have their dominance in the market is still quite strong, but with a slower cadence and roadmap, does that give an opportunity perhaps for an AMD to make a little bit of an inroad? That's something we'll have to continue to watch over the next couple of quarters.
Okay, well, bouncing like Billy-O this morning from the lows, certainly from the lows last night and from the start of the session at 4 a.m. this morning in New York. Frank, thank you very much. Frankly, HSBC with a buy rating on $145 on this stock. Bloomberg's Ed Ludlow sat down exclusively with the CEO, Jensen Huang, on the new Blackwell chip and the expectations going forward. Let's take a listen.
We made a mass change to improve the yield. Functionality of Blackwell is wonderful. We're sampling Blackwell all over the world today. We show people, giving tours to people of the Blackwell systems that we have up and running. You could find pictures of Blackwell systems all over the web. We have started volume production. Volume production will ship in Q4. Q4, we will have billions of dollars of Blackwell revenues, and we will ramp from there. The demand for Blackwell far exceeds its supply, of course, in the beginning, because the demand is so great. But we're going to have lots and lots of supply, and we will be able to ramp starting in Q4. We have billions of dollars of revenues, and we'll ramp from there into Q1, into Q2, and through next year. We're going to have a great next year as well.
Jensen, what is the demand for accelerated computing beyond the hyperscalers and Meta?
Hyperscalers represent about 45% of our total data center business. We're relatively diversified today. We have hyperscalers, we have internet service providers, we have sovereign AIs, we have industries, enterprises. So it's fairly diversified. Outside of hyperscalers, there's the other 55%. Now, the application use across all of that data center starts with accelerated computing. Accelerated computing does everything, of course, from the models, the things that we know about, which is generative AI, and that gets most of the attention. But at the core, we also do database processing, pre and post processing of data before you use it for generative AI, transcoding, scientific simulations, computer graphics, of course, image processing, of course. And so there's tons of applications that people use our accelerated computing for, and one of them is generative AI.
Well, the market in the very first instance, after the results, saw the market drop by 8% last night. Jensen Huang talking about the billions of dollars, several billion dollars that would come from Blackwell. The ripple effect across the rest of our markets, let's just check in on some of the chip stocks that we have. As you can see, NVIDIA bouncing from its lows in the very first instance. And the rest of the market coming off its lows as well. Micron still in negative territory, down 0.55%. Let's see how this market progresses through the rest of the day. The anticipation for Blackwell is incredible. Isn't New York just phenomenal at this time of the day? It's coming up to dawn in New York. Good morning from a beautiful city.
is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Our principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon and Sudan and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
It's rare that we have the opportunity to have this kind of exchange. And given the state of the world and the need for us to responsibly manage the U.S.-China relationship, I think this is a very important meeting.
That was the U.S. National Security Advisor, Jake Sullivan, speaking after his meeting with the top Chinese general. He described it as being very important, the military dialogue. Sullivan then had a meeting with President Xi Jinping on the last day of his trip as Washington and Beijing seek to stabilize relations. Rebecca Chung-Wilkins is with me. Rebecca, good to have you with me. The readouts so far, we've got the military readout, both sides. Again, some of the old issues have not gone away over Taiwan, but what's the readout so far from the meeting with Xi? This is quite an upgrade on day 3 and the final day of the tour by Sullivan.
Yeah, I mean, just to take a step back briefly, this has been a real tour de force by Jake Sullivan. He has had pretty extraordinary access opened up to him, meetings with the top diplomat Wang Yi, multiple sessions, multiple working lunches, sitting down with the top general for the PLA, that's the Chinese army, and now this hour-long discussion with Xi Jinping. We're waiting for some more details from that, but we do have some comments. Xi Jinping urging this sort of rational, quote-unquote, rational attitude from the US, and also asking Washington to meet it halfway. Now, that echoes some of the language in the other readouts that we've seen, really sort of urging and asking for the US to treat China as an equal. But the fact that they are talking, that the strategic channel, as it's called, between Sullivan and Wang Yi has continued over the past few months, and that he is now getting this access with, of course, like the prominent person in China, I think it is a sort of testament to how Beijing is committed to trying to future-proof the relationship, trying to lay some kind of firmer foundation when it comes to US-China relations, even if, as you say, Manis, there are still these obvious sticking points, things like Taiwan, the South China Sea.
And we've had this is on AFP, Biden looking forward to engaging with China and Xi in the coming weeks. So this is from Sullivan. Look, what is the possibility now of Biden and Xi actually? Do you think it's going to be a physical meeting? Do you think it's going to be somewhere around the world? We've got a couple of big events coming up before Biden steps down as president. So what format do you think we'll see? All the language is gearing up to something potentially quite big.
Yeah, absolutely. I think one of the biggest deliverables that we've seen from the Sullivan trip is this call that's going to take place between Xi and Biden, and that call itself may help pave the path. Again, this is sort of speculative, but may help pave the path to some kind of physical sit-down between Xi Jinping and Joe Biden. There are several opportunities, as you say. We've got G20 in Brazil in November. We've got APEC, the ASEAN conference in Peru, also in November. These are the types of meetings that historically those leaders have been at the past. So it's possible that we see a meeting like that on the sidelines. And just to underscore the importance of it, I mean, if Joe Biden, as it looks obvious to be, does not visit China, he will be the first US president not to visit China since Jimmy Carter. So in some ways, there is something of a sort of break in tradition and break in the history that we've seen, which may make some kind of final face-to-face meeting a little bit more important and perhaps a little bit more urgent and higher up the priority list.
Well, it certainly is a defining line. Meet me halfway. I hope the US can meet China halfway. There's a song in that. Rebecca, thank you very much. Rebecca Chung-Wilkins on the very latest of Jake Sullivan's travels to China. Coming up, economic data and the first joint interview of the Vice President Kamala Harris and Tim Walz. Context Matters on Bloomberg. Good morning.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
Bloomberg Brief. I'm Manish Craney in New York. Here's what's on the day ahead. You got it. More retail. Best Buy, Dollar General, Campbell Soup, all before the bell. U.S. GDP and jobless claims. Jobless claims. We know it's taken on a whole new meaning at 8:30 a.m. And more Fed speak. You had Bostic yesterday. Today you get a little bit more from the Atlanta Fed President Raphael Bostic at 3 5:30 p.m. But let's get back to the earnings. Bloomberg's Dasha Afanasieva joins me now. We're waiting for Dollar General and Best Buy. I've been to Best Buy, but I haven't been to Dollar General. What do you think we're going to get?
Hey, Dollar General should be a stock, should be a company that does really well at the moment because of these value-seeking consumers that really like a bargain. And foot traffic data suggests that it is getting some of that trade. The problem is that it's actually competing with Walmart, that's been doing really well. And if you're competing on price, you are, of course, hammering or potentially hurting your margin. On top of that, Dollar General has an inventory problem, $7 billion at last count, and the market's going to be looking to see whether it's managing to bring that down. For Best Buy, it's a much worse story. They're expecting a 3% decline for the year in same dollar sales, and particularly appliances, because we're not moving house anymore. We're not renovating, or I should say Americans aren't, you're not. And the appliances sales are expected to fall 10% in the quarter.
No, I'm not moving. I've got a pretty good rent deal, so I'm sticking with that. Consumer confidence here is on a high. It's at a 6-month high. The forward view is high. I don't know whether to lean into that or lean into the fact that Americans are tapping their home equity loans for the first time in a number of years. It's that juxtaposition between keep on spending and perhaps how are you spending. What do you think you learned at the end of this reporting season? Is there a real concern about the durability of the U.S. consumer?
I think the U.S. consumer is really sick of the gouge economy. They're sick of higher prices, and they're deferring spending where they can and looking for bargains when they are actually going to buy something. And I think that's what retailers and consumer goods companies need to see. It's a highly promotional environment, which, you know, like I was saying for Dollar General, means that your margin is under pressure. And it's the companies that are getting ahead of that with cost cuts, with talking about efficiencies that the market has more trust in. On top of that, you know, it's a, sorry, I forgot. There's also the CEOs being under a lot of pressure. So there have been a whole series of CEO ousters. So I think they're not safe. If they're not able to communicate that confidence to the market, then they could be in trouble.
Yeah, look, it's very clear. It is about that careful, cautious outlook that we got from Walmart in terms of the consumer behavior. Dasha, let's see what the last hurrah is on the retail front, and we'll catch up tomorrow. Dasha Afanasieva on the retail outlook. There is only one story that has been for the past 48 hours. It's almost like a cathodic lancing of a boil in that the NVIDIA numbers. So what did you learn? The stock was down 8% at one juncture yesterday evening in the after-hours market. I can tell you we have traveled higher through the past hour as America comes into the pre-market. What did you learn? You learned that revenue and profit, they're going to grow by 15 and 12% respectively. That was a bit lighter than the first quarter growth of 18% and 21%. What did you learn about this new product, Blackwell? Well, initially the market was spooked when Huang said you can anticipate incredible things for Blackwell, several $1 billion. But again, the market felt that was not enough. This is the read across into the broader market. You've got, again, all bouncing from their lows when we hit the tape, when we came in this morning and we looked at these markets at 4 a.m. It's growth, Jim, but perhaps just not as you may well have known it. You've also got the narrative coming from UBS that they are cutting their China growth trajectory for this year, 4.6%, and going into next year. By the way, they joined JP Morgan and Nomura, so you're in the consensus zone of the 4.5 to 4.6, but it's next year that's perhaps more prescient. 4% is the narrative for growth in China. That's it from the brief team from a beautiful New York.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
We are in a fairly sweet spot that's been priced decently into the market.
This is an environment where you have to look at the fundamentals.
I think investors should go into a more diversified, multi-sector approach.
This market is driven by fundamentals, and it's not a gimmicky rally.
We're still having the mother of all debates between the bulls and the bears.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your trading day started live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Equity futures on the S&P 500 just turning positive in the last hour, up by 0.33%. Investors buying the overnight weakness. Nvidia erasing aftermarket losses as the best performing stock on the S&P 500 this year runs into just a little bit of turbulence. Nvidia's down by 1.8% after failing to meet some very, very high expectations. The reaction from the south side on the edge of comical. Morgan Stanley's Joseph Moore, expectations become more challenging as the superlative becomes mundane. TD's Matthew Ramsey in what seems like a nearly absurd statement in the context of a quarter in which Nvidia printed data center growth of more than 150% year over year. At least the short-term noise is likely to continue.
So I saw Dan Ives. He's coming on the show shortly. I saw him in the green room, and he didn't have on a black suit that looked like yours, that had a skinny tie. And he said he was a little worried for a hot second that he might have to go out and change his sartorial approach. But it was not to be. And he vows that at the end of the day today, it will be green because people will reassess their freak out and realize that perhaps they were just responding to algos.
It's certainly heading in that direction. We were down a lot more than this after trading yesterday, erasing this morning's losses as well. Look what we get in terms of the numbers. Let's work with the forecast first. For the third quarter, the company looking for 32.5 billion. Analysts had predicted on average about 31.9. But the high end of the range was 37.9. So I guess the whisper on the buy side, the people actually in the name, Lisa, they were looking for a much bigger number.
Well, this was the lowest gain, lowest beat that you'd seen in about 6 quarters. So it shows a deceleration. And there's this larger fear. Has NVIDIA and has, frankly, the larger AI theme kind of run out of room to be a moonshot? That is the concern. Yes, you're pricing in growth, but you can't price in the same type of trajectory that you did a year ago. My question is, how much are people looking at the Blackwell delays, looking at gross margins that actually came in about 3% and saying, hold on a second, they're losing pricing power. They're losing this astronomical rise. And you can create a story that way. And then you look at the numbers and it's sort of a reality check because you start realizing, wow, they're really doing really well. So we're just basically coming up with reasons to fade this story just shortly.
We'll spend some time on those manufacturing difficulties. The price action, though, recovers from last night. If you were looking at the price action yesterday evening, this is not what you expected this morning. The S&P 500 up by a third of 1%. NVIDIA down by not even 2%. Coming up a little bit later, the fate of today's market, not just in the hands of how impressed you were or not by those numbers from NVIDIA, but also in the numbers at 8:30 Eastern Time. Jobless claims just around the corner. Every single week, we just seem to be putting just a little bit more weight on this high-frequency data around the labor market.
Yeah, although the high-frequency data is about clear as mud. I think that's what Emily Rowland said yesterday, because basically you've got contradictory signals in everything. On one hand, yes, you have seen jobless claims creep up just a bit. On the other, when you listen to the rhetoric on earnings calls, these are not companies that are about to do mass layoffs. And I think that that's really important. When you look at the actual underlying numbers, yes, you did have that 818,000 revision downward of last year's jobs. At the same time, that just brings us down to pre-pandemic norms. This is the reason why people aren't baking in some sort of hard landing, but they are watching closely in case they're missing something.
The estimate today, 232,000, bang in line with the previous week of 232K. Mike McKee is going to break down that data for you. The broader cross-asset price action shaping up as follows. Equities doing okay. Doing okay, just about positive. In the bond market, yields a little bit lower by a basis point, 382.35. Over in Europe, a lot of talk about what's happening with the inflation data, particularly out of Germany. German CPI pulling back from the previous month, which could set up a rate cut not just in September, but at the following meeting, Lisa, in October. It's a break of 111 at 110.95.
This actually is one of my biggest questions heading into the end of the week and next week. Is this weaker dollar story durable? It has actually seen the yuan go positive for the year. Over in China, you've seen the euro cross through 112 briefly. How much is that losing preeminence as you start to see rate cuts being baked in elsewhere and, frankly, lower growth outlooks? This really highlighted that. We saw basically those preliminary CPI numbers coming out of Europe just showing why aren't they going to cut just as much of the Fed, as the Fed, if not even more?
Yeah, a slightly stronger dollar this morning then, 110.94 on euro dollar. Here's your lineup this hour. Coming up, we'll catch up with Brian Levitt of Invesco on what NVIDIA's earnings mean for big tech. James Lucia of Capital Alpha Partners ahead of Kamala Harris's first campaign interview. And Terry Wiseman of Macquarie on why unemployment could hit 4.5% in next week's jobs report. We begin with our top story, a beat but not a blowout. NVIDIA shares inching lower after posting an underwhelming forecast. Brian Levitt of Invesco writing the following. The market seems to be demonstrating some concerns about the margins and the willingness of the large tech companies to continue to spend on chips into 2025 and 26. Brian's with us for more. Brian, good morning to you.
Good morning.
You've said before you're a FOMO guy. Are you still a FOMO guy after those results?
Yeah, I am still a FOMO guy. I mean, those are outstanding results. I think at some point we need to define what blowout means with regards to this. And, I think what's critical is, yes, NVIDIA is such a big percentage of the broad market, and but investors are viewing this as like the bellwether for all things right now. I mean, I even heard that there were earnings parties yesterday. I wasn't invited to any earnings parties.
I didn't get an invite either.
Yeah, I assume that now. Yeah. So, it's, it is a very focused part of the market. They have a hyper-focused client base, so investors are putting a lot into this because of the heavy concentration. In actuality, a bigger story has been some of the broadening out that we've seen in the market in recent weeks that a lot of investors were hoping for since the beginning of the year.
We can spend some time on the increasing participation in just a moment. You've brought up the customer base. What's happening further downstream away from NVIDIA? Meta, Alphabet, all increasing CapEx budgets recently. Do you see any reason at all to be concerned about the prospect of maybe some of those companies pulling back on CapEx budgets in quarters to come?
I mean, if you listen to them right now, it sounds like overinvestment. Right? And this is like an arms race, everybody trying to get ahead, nobody wanting to be left behind. I think, when we try to pick nits a little bit, my kids just came home from camp, so we're looking for lice, right? When you try to pick nits a little bit, yeah, maybe you start to see some of these other businesses developing their own chips, or maybe the overinvestment gets too far. But there was nothing in that report that suggests that this structural story is impaired.
Just shave their heads. I'm just telling you, that's probably the best way to go. But
Grandma's brew said it wouldn't matter.
It probably would. You're actually not wrong. I did find this interesting, though. About 40% of NVIDIA's return really is coming from these 4 companies. And that really raises this issue of, okay, can they broaden out? I mean, if you want to talk about the broadening out trade, can they broaden out to a wider swath? They talked about potential governments that were going to be buying chips. I mean, do you buy that? Do they need to? Does that matter? Or are you basically saying people are just, they need to just shave their heads and move on?
No. I think over time they will need to broaden out that base. I mean, right now you have significant overinvestment from the big names, but of course that creates some of their own concentration risk, ironically. So it will need to broaden out, and it likely will, right? I mean, so far we're talking about generative AI for the most part, but this starts to move into many other different facets.
So you are a FOMO kind of guy.
Yeah.
You sound pretty optimistic. You're looking through the nits. You're taking a look at this and saying, realistically, NVIDIA is still going to be a blowout name. And yet you say, tactically, you favor more defensive positioning, even though you don't see any kind of hard landing, even though you don't see any kind of massive turmoil ahead of the election. Why is it time to be defensive?
Yeah, so that's just a tactical call over the next few months, and we've been very optimistic over the long while here. So it's a tactical call, and largely what you're seeing is leading indicators for the U.S. economy slowing or pointing towards some slowdown here, and you have pretty significant expectations for Fed interest rate cuts now. So it almost feels a little bit like the November-December period of last year, where the markets got very excited about a lot of rate cuts, but the Federal Reserve is still somewhat cautious around how many cuts you're going to get. So the economy slows, and the Federal Reserve is still saying, we're not necessarily going to cut 6 times in the next so many months. Typically what you see is more of a quality environment in the slowdown. This has been a little unique in that indicators are pointing to slowdown, but the market's less concerned about that, and the market's focusing on rate cuts right now. And the Fed has to deliver.
Do you think there's a big difference between now and the start of the year? We're pricing in a lot of cuts now, priced in a lot of cuts at the start of the year. What's the big difference now?
Well, the big difference now is that you're seeing jobless claims move up a bit. You're seeing the unemployment rate move up a bit. So it's more likely that the Fed hasn't moved, right? So it is more likely that the Fed carries through with some of it, right? We're going to ease in September and may ease another couple of times this year. The question is whether you normalize the yield curve in the time frame that the market is currently expecting. So I want to be clear. When I say tactically defensive, we're looking at our preferred indicators that suggest this is usually an environment where quality outperforms. But when we come back to the FOMO comment, I'm a big believer that in the aftermath of peak inflation, in the aftermath of peak rates and peak tightening, the markets tend to do well over the subsequent years. So when defensive means more of a factor call, or our view that rates were going to come down, which has certainly happened, it doesn't mean that investors want to be out of stocks. Equities, again, tend to do well in the aftermath of tightening over the next few years.
To put these ideas together, there were a lot of people looking for signal in the response to NVIDIA's earnings yesterday about market positioning, about market sentiment, saying, does this highlight how concerned people are that they are overly leveraged to one specific name and one specific theme at a time, where you can't be a moonshot forever? And it highlights the crowdedness and the willingness of people to just ditch as quickly as they can, even unknown news. Is that telling you anything about positioning and the state of this market, just structurally?
Well, what it tells you over the next couple of years is that you have a little bit of a less healthy environment for markets where everything was very concentrated. Now, there was nothing in NVIDIA's news to suggest that that was incredibly disruptive for NVIDIA or the S&P 500. We're seeing that this morning. What you would like to see over the next couple of years is this proverbial soft landing, the renormalization of the yield curve. If you get that, an equal weight strategy or different flavors within the S&P 500 should pick up participation. You go through these long periods where the market cap wins. And then you need some type of catalyst to change that. Now, candidly, usually that catalyst is a recession and a recovery. What we're hoping for this time is a slowdown, easing, and a recovery.
That's what's weird about this time. You want to play the recovery to the recession we've not had and maybe won't get.
Which is the reason why we haven't gotten it and maybe won't get it. But at the same time, I wonder how nervous people are. How people are getting a little self-conscious that maybe they're a little too all in on the soft landing theme. Even if it happens, that maybe it's overpriced on a risk-reward level.
You needed to go to those earnings parties last night and ask them how they felt after the numbers dropped and the stock moved lower.
I did. Yeah. There was a lot of confusion, and then they pressed sell. And then they took a drink.
I didn't know we were doing that now. Is that what we're doing now?
There were these parties, but it was sort of interesting. There was an article about the parties.
Right.
I forgot what they're called. I have to go back and remember what they are called. Of course, I was there doing crowd research, but I still have to do the research just by doing Google. But to me, there is this question of how quickly they lost their faddom. You know what I mean? Okay. It's sort of, the fact that it didn't really carry through.
Shall I do a Chair Powell viewing party next Fed decision?
Why not?
September 18th.
I'll join you.
Host it in a pub downtown or something.
That sounds...
You do the show with TK.
Oh, gee, thanks.
I'll be down a microphone. You know what they do with the sports, to the football?
We're going to do it a remote. That would actually be very appropriate. I think that some people would like it more than others.
Probably prefer it.
I wouldn't really
TK
think that was
would
you.
love it. Yeah, absolutely. Brian Levitt, thank you, sir. Thank you. Brian Levitt there, over Invesco. NVIDIA, just to check in on the name. Lisa, we were trading as low as 118 earlier this morning, literally 2 hours ago. Now we're around 123 in the pre-market.
Which I guess isn't surprising when you actually take a look at the numbers, considering that they actually did beat expectations pretty much across the board. Yes, it wasn't a blowout. It didn't meet the top expectations. But the fact that people are looking at margins as a reason to lose hope, the fact that margins came in, when you take a look at what the CFO actually said about margins coming in, 3%, was this was a direct result of the Blackwell disruptions, and that it was going to shift back as soon as those were corrected. So it wasn't basically saying, this is it, guys. It's over.
Still trading lower by 2.2%. Stay tuned. Dan Ives of Wedbush is going to join us shortly. He won't be saying this story's over. He is very bullish. He joins us on the other side of the commercial break in just a moment. Let's give an update on stories elsewhere this morning. Here's your Bloomberg brief. White House National Security Advisor Jake Sullivan wrapping up a 3-day trip to China with a meeting with President Xi Jinping. It's the first time Sullivan has had one-on-one talks with the Chinese leader. The meeting coming hours after his first ever face-to-face with a top Chinese Army general. Elsewhere, the FBI saying the gunman who attempted to assassinate Donald Trump searched online for both Trump and Biden campaign events and looked up information about explosives online over a span of 5 years. Investigators have conducted nearly 1,000 interviews, but say the suspect's motive is still unclear. And finally, Salesforce shares rising in the pre-market, the software giant beating second quarter expectations, relieving some investor concerns over a potential sales slump. Salesforce also announcing that CFO Amy Weaver will step down once her successor is chosen. That's the latest then. Up next on the program, NVIDIA hitting some turbulence.
The demand for Blackwell far exceeds its supply, of course, in the beginning, because the demand is so great. But we're going to have lots and lots of supply.
That conversation up next, live from New York City this morning. Good morning.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Dan Ives just got back from a viewing party. Hasn't slept. He's going to join us in just a second. Equity futures on the S&P 500 recovering, up by 0.25% on the S&P 500. Nvidia doing a little bit better. We're still down by 2.4% in the pre-market. Under surveillance this morning, Nvidia hitting some turbulence.
The demand for Blackwell far exceeds its supply, of course, in the beginning, because the demand is so great. But we're going to have lots and lots of supply, and we will be able to ramp starting in Q4. We have billions of dollars of revenues, and we'll ramp from there into Q1, into Q2, and through next year. We're going to have a great next year as well.
Here's the latest. CEO Jensen Huang telling Bloomberg supplies will be plentiful, even as Nvidia's new Blackwell processor lineup is proving more challenging to manufacture. Dan Ives of Wedbush still bullish. We believe Nvidia's surging AI chip demand, Blackwell delay concerns allayed, robust outlook, and a meteoric enterprise pipeline speaks to this AI revolution just starting to kick off its next phase of growth. Dan drops by the studio for more. Dan, good morning to you.
Great to be here.
Let's start with the production problems. What did he say overnight that allayed your concerns?
There were worries that these delays were actually going to linger into year end. And essentially, they put that to rest. And I think that's something, you talk about billions from Blackwell, but ultimately, we're talking about what could be tens of billions. So if anything was going to spoil this party, it was the Blackwell delays. And I believe, even though the initial reaction, bears came out of hibernation mode for a little last night, it was good to see him, I believe this is a stock that should be green today. And for broader tech, you heard everything you needed to, and from a demand perspective, from Godfather of AI, Jensen.
Manufacturing this stuff is incredibly complex. Apart from saying it will increase, was there any real detail about manufacturing yield improving somewhat through the quarter? Did you get any real detail about what was actually happening at these factories?
He talked about yields improving. And if you look from a yield perspective, the biggest thing that could hurt this story was significant Blackwell delays. And that's something that checked the box. You look at the demand perspective in terms of the October quarter. Okay, could Whisper has been 33 billion, it was 32.5 on the margin. Realistically, as they execute, this is probably going to be a 33, 34 billion type of quarter. So then you look out further and you're like, okay, you start to get these 2 billion and 2 billion continued beats. You start to look at earnings power that significantly goes higher into next year. And relative to CapEx and everything we're seeing in tech, this was the most watched earnings. I mean, we had watch parties. I'm not sure if you were at one of the watch parties. And it's something where I think they came, delivered, and I think for tech, this is going to put fuel in that rally.
Here's a comment from one of those parties. It's fun. It's like a cultural thing. You don't have to be here to root for a winning team. I'm just letting you know, very much the popular zeitgeist. I'm very curious, though, about what you think with the Blackwell revenues that they are projecting out. They were very nonspecific. They said, yeah, billions of dollars. And people are looking at that and saying, if you really want to convince us that this Blackwell delivery delay isn't going to be a serious problem, why not provide specifics, especially at a time where margins are coming in, especially at a time where they're not able to diversify their buyer base.
Yeah, and we think that's ultimately, from all of our checks in Asia, tens of billions, not just billions. But Jensen, grand wizard, grandmaster poker player, not going to reveal the playbook. That's smart. But if you look at NVIDIA here, this is LeBron in high school in terms of where this story is ultimately going. And the most important thing is the multiplier effect. Because this is for broader tech. It's not just about NVIDIA. It's not just about Microsoft. For every dollar spent on an NVIDIA chip, we believe it's an 8 to 10 multiplier across tech. And I think that's something that's probably the most important for investors.
You know, it's fun, and it's fun to talk about The Godfather and popcorn and all that. You actually have been in Asia a lot, and you've been looking at the factories, and you've been talking to people who are the end buyers of some of these chips and the producers to understand exactly how much demand there is. What have you seen that gives you such confidence that this really is a takeoff story, even now, with some questions about how long the magnificent 3 or 4 U.S. big tech companies can continue to support it?
Yeah, and we'll be going back to Asia on next week. $1 trillion of CapEx is what we see from an AI perspective over the next 3 years. You go back 6 months ago, we thought that was $500 billion. And so every quarter, if you look at the underlying demand, not just from hyperscalers, but eventually what's going to be other enterprises, it's just starting. So all of our checks are showing demand's actually continuing to accelerate. You know, as Farrell talked about, yields are improving from a production perspective, that they're the only game in town. Use cases are coming through. We saw that with Palantir. You see that with ServiceNow. Now this fourth industrial revolution, Rome wasn't built in a day, neither will AI revolution. It's starting to come together. Anyone that thinks this is hype, you listen to conference calls, NVIDIA, AMD, Microsoft, Palantir, and others. I mean, I don't know what watch party those bears are, but they're not listening to the calls that I am.
You say it's LeBron at high school. Why isn't it Zion Williamson? Why couldn't we end up with a situation where we actually get real competition and it just doesn't do that well anymore? How big is this moat around this company?
Yeah, and I think it's a great question. Right now, only game in town. AMD and obviously Lisa Su and others are going to benefit. The reason this is a LeBron in high school is because they are so ahead of any other competitor. And right now, they're the only game in town. The new gold, the new oil, it's AMD chips. And when you come away from that conference call last night, now I get after hours and bears will come out, but there's nothing that makes me think that we don't have a year from now or less. You have $3-4 trillion market caps. Godfather of AI and NVIDIA. What's happening in Cupertino with the AI supercycle starting off on iPhone 16, and what's happening with Nadella and Redmond.
Well, okay, in fairness to the bears, because the bears weren't exactly coming out and saying this stock is going to tank. They're saying maybe, you know, just cash in a few chips after 1,000% rallies going back to October of 2022. A real question here of how big the addressable market is, and a question about whether they can essentially go into some of the data centers that their buyer base are trying to fund and create. And basically, how much do they become competitors with their main customers? And a real question about cannibalization at a time where big and bigger companies are increasingly gaining the scrutiny of regulators. How much are you sort of factoring that in as a ceiling for how far this godfather of AI can go?
Yeah, and it's a balance because you even look where like Microsoft's going, where Google on clouds, Amazon. So definitely like it's a little bit of a co-opetition that's happening here. Look, from a regulatory is 40 miles an hour in the right lane in a minivan. The technology is 100 miles an hour in a Ferrari in the left lane. And I just think this will be self-regulation. You'll have a lot of M&A. Look at OpenAI in terms of what looks like that next round of funding is. It's a scarcity value. You will start to see those eventually, some more competition. They'll butt heads. But this market, it's the first, second inning of a 9-inning game. That's sort of our view in terms of where we are from an AI revolution.
Monza this weekend, right? Formula One.
Yes.
Big race. Dan, it's good to see you.
Yeah, great to see you.
Thank you. Dan Ives of Wedbush. NVIDIA, Lisa down by 2.5% in the pre-market.
There's nothing wrong with minifans. Just want to point that out. What he's talking about is actually really important, which is essentially how much are we just seeing the beginning, and maybe people have gotten disappointed by the pace of adoption and the pace of some of the use cases. It doesn't mean they're not coming. And that's actually a very interesting distinction that I'd like to explore more.
We'll explore it more later on this morning. Coming up next on the program, Kamala Harris sitting down for her first campaign interview tonight. James Lucia of Capital Alpha Partners joins us next from New York. You're watching Bloomberg Surveillance.
Because I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Things are looking a little bit better. Equity futures up by 0.2% on the S&P. On the S&P 500, NVIDIA makes up about 6.6% of that index, around 8% of the NASDAQ 100. And NVIDIA is doing a little bit better. In the pre-market, NVIDIA negative by 2.8%. We'll come back to that story in just a moment, but just a flavour of equities for you this morning. Switch on the board and get to the bond market. Next stop for fixed income, 8:30 Eastern Time, 2 hours from now. Jobless claims drop. The estimate, 232,000, bang in line with the previous week. And in this case, Lisa, a me is a B. We'll take that 232 and a rate cut in September. Thank you.
Yeah, basically, will we start to see people ratchet back their expectations for a 50 basis point rate cut? Are you even interested in that story anymore? Does it matter? Is it going to be the pace of rate cuts? Have people basically moved on? My question is, can you reconcile the degree of cuts that we're expecting without weakness in a more considerable way? How much have people moved on from the story of a hard landing and just accepted soft landing? And to me, that's one of the biggest sort of clouds over this economy, over this market, I should say, is this is the base case. It is a soft landing. It is soft landing nirvana. How much have people not priced in the risk of recession, even if it's not the likely scenario? Just they're not even counting that in the potential.
And how much of all of this will unlock real dollar weakness? Switch at the board, turn a page and get to foreign exchange. Let's push this through the FX market. I want to talk about the other side of the trade. Lisa mentioned this earlier this morning. Never mind Federal Reserve interest rate cuts. What about the ECB? So take a look at the chart, 110.93, it's a break of 111. We get a regional breakdown of German CPI. Out of the headline read that you get from the Eurozone tomorrow. And the read down, basically the breakdown of what we got from regional German CPI was weaker than expected almost across the board compared to where we were a month ago, teeing up the potential not just for a rate cut next month, Lisa, but the month after that and maybe onwards from there as well.
And it's not just Germany. The preliminary read out of Spain also shows the same kind of downward surprise when it comes to inflationary pressure. Where is the inflationary concern that's going to outweigh some of the weakness that you're seeing in a material way? When we caught up with ECB officials last week, they seemed like they were increasingly interested in potentially cutting rates just as much as the Federal Reserve. So this idea that the Fed is going to somehow outcut the ECB at a time where the ECB is facing off with more weakness and seeing the same disinflationary pressure, let's see.
That German data will encourage them. 110.93 on the euro. Under surveillance this morning, shares of NVIDIA inching lower in the pre-market. The company's highly anticipated earnings failing to live up to some pretty high expectations, delivering an underwhelming forecast and news of production snags on its Blackwell chips. We heard from Dan Ives of Wedbush just moments ago. No real concern there about the supply issues. In fact, for Dan Ives, the fact that we spent the whole interview talking about the supply issues speaks to how bullish he is about everything else, particularly the demand side.
Yeah, given the fact that they definitely continue to outperform, these are some of the snags people are picking up on. About a 3% decline in gross revenue margins, this idea of how much of that's coming from Blackwell. The idea that 40% of NVIDIA's return stems from Alphabet, Google, Meta, and other large data operators. So not diversified in terms of what they're doing, and then just high valuations. Just to put this into perspective, I thought this was an interesting statistic. Their market valuation is more than $3 trillion. That means that NVIDIA is worth roughly the same as the 10 next largest chip companies combined. So it just gives you a sense of how far they have to fall, which is an important perspective before talking about Armageddon.
That's why the bulls aren't freaking out, because the moat's so big, even if there are supply issues, production snags, manufacturing yield continues to be a little bit lower than expected, no one else is filling the gap anytime soon.
You know what we didn't even mention today? The $50 billion of share buybacks. I mean, it's just, the reason why the bulls aren't that worried is because the numbers are pretty astronomical. It's just that they aren't incredibly astronomical, over the top, and everyone's gotten used to this. So at a certain point, how do you price, again, a moonshot? And how do you determine when it becomes just a growth story and not a moonshot, and what that means for future earnings expectations?
The biggest risk for this company, away from supply on the demand side, is the patience of investors in their customers. Do they need to demonstrate a much bigger return on investment on this increasing capex that we're seeing quarter after quarter, and do they need to show it quickly? Don't see that yet in a big way, but starting to see very small signs of it.
You mean we need to understand what AI does?
Precisely.
We need to understand who's going to be able to use it and who's not going to be able to use it. We need to understand the real return on investment. And these are some of the questions that have led to some people to have skepticism. Other people say, just wait. And when you talk, or when you hear some of the executives of some of these big tech companies, as you've pointed out many times, they believe still very much in the story that they cannot invest enough.
NVIDIA down by 2.7%. More on that a little bit later. Let's turn to the Fed speak. Atlanta Fed President Raphael Bostic looking for additional data to support cutting interest rates. Bostic saying the following: I don't want us to be in a situation where we cut and then we have to raise rates again. Raphael Bostic has said this a few times. Now, I'm not saying he's not going to reduce interest rates next month. If you go through some of his recent comments, he's almost there. But the fact of the matter is, we're still having a very different conversation at the Federal Reserve than we are with Chairman Powell himself. For other committee members, I just like, you go back through that speech again on Friday, you listen to comments like that, there's some daylight there. Let's put it that way.
It seems like he talks about his confidence that inflation is truly coming down to the 2% target. It seems like Raphael Bostic might not have the same kind of confidence. That said, we spoke with him last week. This was someone who is very much prepared to cut rates by 25 basis points in September. How much do these declarations push back against the pace and the scope of rate cuts more than the actual kickoff of a rate cutting cycle? They will cut rates. Question is, what's the destination? And is 200 basis points or more of rate cuts by the end of next year overdoing it without some sort of downturn?
You'd have to see some real weakness to get to 50, wouldn't you, in a jobs report?
I think so. I don't, okay. Disclaimer, personal opinion, I don't see how they could justify 50 basis points pushing the market completely off sides without there being a real reason that they are concerned that would justify them recognizing that weakness in a more material way that could spook markets. To me, I don't see the rationale for that.
We've got a week to work out what the number needs to be. Citi's looking for 125, and they say that's enough to go 50 in September. RSM are looking for sub 100 to make that happen. Sub 100? 125? 125 over at Citi. That's a pretty punchy call, by the way. 125 sufficient to engineer a rate cut of 50 basis points on September 18th.
That means they believe that the 50 basis points is all but the base case, and that essentially the bar is very low to get there. They're not really together with other people on that, although if you do think about what Chair Powell said, he did say we will not welcome further cooling. This would be further cooling, so would that prompt a bigger response?
Unemployment, a big factor in all of this as well. We'll bring you some more numbers and estimates through the program. Elsewhere, Kamala Harris and running mate Tim Walz sitting down for their first interview since accepting the nomination as the pair campaign in Georgia. The latest polling from Fox News showing Harris holding a narrow lead over Donald Trump in Georgia, Nevada, and Arizona, while Trump leads in North Carolina. Joining us now, James Lucia of Capital Alpha Partners. James, welcome to the program. Looking ahead to this sit-down conversation later, what are the questions that you have in mind that you'd like answered later on this evening?
Well, the questions will actually be answered about 1:45 when the Harris campaign says the interview will actually be happening. I think the Harris campaign wants to make as little news as possible to keep that Cinderella moment going as long as possible. Donald Trump would clearly ask pressing questions on fracking on the border, whether she's walked back from any of her positions. But this format of the interview makes it hard to say exactly how well Dana Bash another network can press these questions. Will she be addressing Harris and Tim Walz at the same time? Why is the first big interview with the presidential candidate a double interview? Is it one long sit down? There's really a lot we don't know about what this interview is going to be.
James, in a big way, I guess our opinion on that matter doesn't really matter that much when it comes to the format. The polls seem to be in their favour. At least that's where the momentum is. James, do you see that momentum continuing?
So the point in this interview would be to do no harm, to provide an interview, to go into that Labor Day weekend, a news cycle on a high note, to demonstrate, yes, that we're willing to step out of the cocoon, we're willing to step out of the bubble and mix it up a little bit. But the fact is, when you're ahead in the polls, there's really no need to play defense. And while Harris is not ahead in the polls by very much, she does have what appears to be a small and sustainable lead, 1 or 2%. She's doing about as well as she and Joe Biden did in 2020, which is probably on a track to win unless Trump can come back and make some of these other issues stick: border, inflation, economy, national security, energy.
James, you said a few weeks ago that choosing Walz for Kamala Harris may have been the beginning of the end of her honeymoon. Have you seen any signs that's the case?
No, as I mentioned, Cinderella, we have a wonderful media honeymoon going on here. It's really a relief rally in financial market terms because where voters or investors, the Democratic base, had written off Joe Biden, they see a very viable candidate here who has a strong prospect of winning, not a guarantee of winning, but very strong position so far. And the real question is whether or not we're seeing a recovery from a Biden deficit or whether we're seeing an expansion. You know, can she really go beyond 51 or 52? Is she more than recovering the fallen away Democratic voters, the younger women, the African Americans, the Hispanic voters? Is she just recovering those prior voters, or is she reaching out to the midstream and picking up more independents too? That's really the test we need to see.
When you look at all the polls and the aggregators of the polls, they all talk about Harris having a small lead ahead of Donald Trump. And then when you talk to people who focus on the market response to the election, they say that the Trump trade is still alive and that people seem to not believe those polls. They think that there actually is a greater chance that Donald Trump will eke it out. Do you agree, first of all, with that assessment of that sort of divide between polls and markets? And do you think that it's dissonant, or do you think that one is right and one is wrong?
No, I think that Donald Trump is still very much in the game. I think that you have to give Harris an edge for momentum. But at 51, 52% in the head-to-head polls, she still doesn't have what she needs to win. Donald Trump has that electorally efficient coalition, and Trump could win a race with 47 or 48. So in order to be really assured of winning, Harris would need to do better than 2 points. She probably needs about 4 points. So she's not beating the spread yet. That's factor number one. And then while we have horse race polls, we don't have other polls about how voters see the main issues, how voters feel about the candidates, the state of the country. Those sort of polls take much longer to do. And before the Harris nomination, before Joe Biden stepped down on July 21st, you had issues polling showing that voters strongly favored Donald Trump on many of his best issues. Again, immigration, inflation, national security, crime. All of that was Trump territory a month ago. Is it still a Trump territory now? We just don't know. So coming in mid-September, we'll probably start getting some of this more detailed polling about issues, voters' perceptions, how voters feel themselves, and more polling on the state of the country, too. So I think that in about 2 or 3 weeks, probably a week or two after the first debate, we'll have a much better set of data, because you really can't tell a lot from the horse-to-horse, from the head-to-head horse race polls alone.
The momentum has certainly shifted. James Lucia of Capital Alpha Partners, thank you, sir. Looking ahead to that interview later on this afternoon, then, of course, to the next debate, the first debate, for these two at least, September 10th. If you are just joining us, welcome to the programme. Equity futures just about positive by 0.1% on the S&P 500. And Lisa, NVIDIA are raising losses. The fear of maybe yesterday afternoon, if we can call it fear, certainly being erased throughout this session so far.
Yeah, to put into perspective, at one point we were down more than 8% yesterday in post-market trading, and now we're down some 2.8%. So can we close that gap? Dan Ives is confident. Otherwise, he will go out and change up his dress.
He almost wore a black suit this morning.
Yes, supposedly. Do you actually think that's the case?
Absolutely not. Absolutely not. I didn't believe that at all. Let's give you an update on stories elsewhere this morning. Here's your Bloomberg brief. Chinese smartphone giant Huawei posting a 6th straight quarter of growth, the company gaining market share against one of its biggest competitors, Apple. Smartphone shipments jumping 50% in the June quarter, Apple dropping to 6th place in the Chinese market. The pressure on this company, Lisa Gunn, it's September 9th. Massive.
You know, I thought this was one of the most interesting stories, just highlighting how much the competition is really pushing American companies out of China. How much is this part of the conversation that we're hearing with Jake Sullivan and Xi Jinping?
It's got to be.
Yeah.
It's got to be. More on this a little bit later. Let's turn to this one in tech. HP shares trading lower in the pre-market. The PC maker cutting its full-year profit outlook on a continued downturn in its printer unit. The disappointing forecast overshadowing the company's first in 2 years, suggesting an end to a long slump in demand for personal computers. And your final story, top hopes Novak Djokovic and Coco Gauff easing into the third round of the US Open with comfortable wins. Elsewhere, Americans Frances Tiafoe and Ben Shelton are headed for a third round rematch. Shelton knocking out Tiafoe in the quarterfinals at last year's event. Did you watch that game last year?
No.
Amazing.
Was it?
Fantastic.
Are you going to go back?
Hoping for more of the same. Nope. Run the gun.
I'm shocked. This is my shock face.
Bravo, too expensive.
Yeah.
It's too much money.
Yeah, I know. And also late.
Too much money.
Bad hours for us.
It's just not work for us at all.
No.
By the time the men's come on in the evening, you're talking like 9:30.
It could have been earlier.
Yeah, you know, I said this evening to James Lucio, and he was like, no, 1:45 in the afternoon. I was like, yeah, that's evening for us.
Yeah, 100% dinner time.
On the edge of night time. Up next on the program, Bostix, big warning.
I don't want us to be in a situation where we cut and then we have to raise rates again. Like, that would be a very bad outcome.
That conversation just around the corner. From New York, you're watching Bloomberg TV.
The names that move markets are on Bloomberg.
Our role in the world, our role in NATO in supporting the Ukrainians in this war, the unprovoked war that Russia has instigated in Ukraine, our support for the Indo-Pacific, for providing a counterbalance to China. All of that is in our interest, and whoever's president, I'm sure, is going to do what's in the best interest of the United States.
It is not a time for America to back off of its commitment around the globe. And I think there's a justification for us making certain that we do the right things in a way that we share the burdens with our allies. But I don't expect America to walk away from the world in any administration. It's about American security, and it's about making certain our adversaries, present and future, know that when America's committed to something, they're there for the long haul.
Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Equity futures on the S&P, positive here by 0.2%, yields just about unchanged. You were looking for a dramatic morning, weren't you? After the fireworks of yesterday, or lack thereof, around NVIDIA. That's not what you've got. In the bond market, 383.11. If you want a single name, Nvidia right now, it's down by 2.5%, and Lisa, at one point yesterday in after hours, that was a whole lot worse.
You know, I wonder, and this goes back to something we've been talking about all week. It is the last week of August. Some people would say it's the last week of some. Other people would say, no, it goes until October. But there's this question here of how many people were actually trading last night, just in terms of a lack of liquidity. And now when people come back and they actually take a look at the earnings and they say, really, guys, you're really going to freak out about a beat across the board and projections for ongoing growth.
By definition, it's almost the end of August. We'll agree on that. All right.
Thank
Under
you.
surveillance this morning. Bosticks, big warning.
We still have a couple data points to come in. There's still the jobs report that's going to come out, I think, next Friday. These are going to be important markers just to make sure that the trend is still continuing. I don't want us to be in a situation where we cut and then we have to raise rates again. Like, that would be a very bad outcome. If I'm going to err on one side, it's going to be waiting longer just to make sure that we don't have that up and down.
So here's the latest. Investors looking ahead to jobless claims at 8:30 Eastern and the August payrolls report next Friday to solidify bets on a September rate cut. Terry Wiseman of Macquarie writing the following: it stands to reason that when we see the August employment report on September 6th, we are likely to see a higher unemployment rate again, perhaps as high as 4.5%. Terry's with us for more. Terry, good morning. 4.5%, sir. Let's start there. What's your read on the labor market that makes you think we're going in that direction?
There's been a deterioration in the labor market in the U.S. It seems to be evident in the data that started to come out in the latter part of the second quarter. It has continued into the third quarter. I would point specifically, and I did point specifically in that report, to what is happening with regard to the polling and surveys in things like the Conference Board's Consumer Sentiment Survey. It specifically showed that the number of respondents that were saying that jobs were harder to get was rising, and the number of respondents that were saying that jobs are easy to get was falling. And it turns out that that is not a bad indicator of the general health of the labor market. It tends to be historically correlated with the unemployment rate over time. That is that spread between hard to get and easy to get. And if you look at where that spread is now, it seems to be much more consistent with an unemployment rate that's in the fives. Now, I'm not saying that the unemployment rate is going to go into the fives, but it certainly is pointing to a deterioration and a direction that would suggest a higher unemployment rate. 4.5%, of course, is just 0.2% above the print from the last month. It's not an egregious or aggressive move to expect. We've seen moves of 0.2% in the unemployment.
If we get there, does that tee up 50 basis points September 18th?
I don't necessarily think so. I think that now that we've seen Raphael Bostic talk in dissent, effectively, to Chairman Powell's very dovish speech from a few days ago, I suspect that there are some people on the FOMC that would resist 50 basis points. And to the extent that the FOMC wants to find consensus, they may just go with 25 basis points. But that shouldn't preclude the prospect that in October we could get 50 basis points. It obviously should not preclude the prospect that we are, deteriorating in the labor market, and that's what's eventually going to cause the Fed to accelerate rate cuts if, in fact, it does so.
Someone listening to this might say, I'm going to go out and short the dollar. I think this means that the dollar is going to get a lot weaker because if you've got a weakening labor market and you've got a Fed that's going to cut a lot, that seems like the direction of travel. Oh, wait, and then you look at Europe. Oh, wait, and then you look at some of these other countries. And yet we've kind of had this toggle between the dollar bulls and bears that's becoming increasingly tense. Where do you fall on that?
Well, look, the dollar has clearly weakened in the last 5 weeks against the majors. I'm going to put the Japanese yen aside because I think that's a special situation. But with regard to sterling and with regard to the euro, there's been a clear deterioration in the value of the dollar. I think in part, or I should say in part, everything's in part. Nothing, you can't find one explanation that explains everything. But one of the reasons this has happened is because the Fed has moved in a much more dovish, towards a much more dovish narrative in the last few weeks, culminating with Powell's speech. But the European Central Bank and the BOE have not. They are still in this mode of suggesting that their outlook is cut and hold, cut and hold. In other words, not to cut sequentially. I think, however, that we are looking at a situation in view of the deterioration of growth in the euro area where the ECB can move to a sequential guidance with regard to the outlook for rate cuts, in the sense they could do 25 basis points each of the 3 meetings this year. The other thing that's happening, of course, is that we're seeing political problems in the UK now, and that seems to be putting in a top for sterling all of a sudden, too. So if you're asking me, is the dollar going to continue to weaken against those majors, I would say no, despite the fact that we are seeing a lot of dovishness from the Fed at this moment.
Just to underscore this point, do you expect the ECB to cut rates more significantly than the Federal Reserve for the totality of 2024?
No, but I think there's a good chance that they do the same amount. If the Fed only does 3 25 basis point cuts between now and the end of the year and the ECB does 3, then you'll have a match effectively. But that shouldn't be the only determination of what happens to the euro or the dollar, right? It's with, the currency is going to move with respect to the surprise in the central bank policy changes, not if what's expected effectively happens. And if there is a surprise, it could be towards a more dovish ECB, potentially a more dovish BOE, especially since we're coming off a time where they have been recently reluctant to signal aggressive rate cuts.
So we'd love your thoughts on a debate that's been emerging over the last month or so. As you know, the investment universe, in the opinion of many, has been building up an aggressively long dollar position over the last few years. We've got this deeply embedded, very entrenched reach for dollar-denominated assets to pick up yield, because you can't get that yield in places like Japan, places like China. And there is a view that once you begin to normalize interest rates, once growth differentials begin to rebalance, higher unemployment rate in America, lower growth, lower rates, that ultimately we unlock a lot of dollar weakness and we get outflows out of those assets. We've had the likes of Stephen Jen, legend of foreign exchange, who you know I'm sure, come out and say that could unlock 10% yuan strength in China. What's your view on that argument and how things stack up?
My view is that it's not about relative interest rates only. Right? Growth plays an important role in the determination of where foreign exchange flows go. And it's not just government bond yields that are important. Of course, returns on real assets and investment in those countries is important as well. And as long as you continue to see better growth overall, real growth overall in the U.S. relative to Europe, let's say, relative to Japan, there will be a strong bid for the dollar. My qualification to that argument, and if I were to support a bearish dollar argument, would have much more to do with the prospect that geopolitical conditions and trends are no longer working in support of the dollar as a reserve currency. If we start to get reserve asset allocators move away from the dollar for geopolitical reasons, then I would have to argue in favor of the weak dollar view. But we're not really seeing that yet, even though some countries are moving away from the dollar, some reserve allocators are moving away from the dollar, some are moving towards the dollar. And right now, we're in a precarious balance between those two.
Is the move in gold the trailer for the movie that we might be seeing in the next year or so?
I'm sorry, which
is the move in gold the trailer for the movie
I think
we might see in the next year?
I think we may very well continue to see a rally in gold. I think that low interest rates, low real interest rates are going to be in support of that going forward, but also geopolitical concerns and risk around global conflict are going to be in support of that trend.
Been around Dan Ives too much, haven't I?
Oh my God, I'm picturing being in a movie theater and all of a sudden.
Dan would write in. Yeah.
Oh, totally. I'm picturing, big gold bullion coming out. It's just wait till the main picture, and then the main picture comes in, dollar weakness.
Next summer.
Next summer. Could you do that one more time?
Terry Wiseman, thank you. That's not happening again. Terry Wiseman of Macquarie, thank you very much. Coming up, it's not happening again. Coming up next hour, Drew Pettit of Citi, Mandeep Singh of Bloomberg Intelligence, Heidi Kribo-Rediker of the Council on Foreign Relations, and Lydia Basur of EY from New York. You're watching Bloomberg TV.
Next summer.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And You know, in the last 9 years, that's gone better than I would have expected. So only now could you even, you know, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up very like this, the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. You know, in the meantime, some people who care about this issue are really out, you know, trying to think, do we need permitting reform? You know, do we find, what new ideas haven't we found yet? You know, how do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep rating World Cup. This is a 3.
As the economic picture
Covering the intersections of Hollywood, Silicon Valley, and beyond.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
On the economic fundamentals, the economy still seems, by and large, pretty healthy.
That combination of the disinflation narrative and better than expected growth is something that's really helping markets continue to run here.
These cuts, I think, are going to grease the wheels for the soft landing.
We do expect some softness in the economy. We don't think it's a recession, but the economy is clearly slowing down.
We are worried that growth can slow, but we're not worried that a recession is necessarily on the horizon.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
2 hours, 30 minutes away from the opening bell, and equity futures doing okay from New York City this morning. Good morning, good morning. The second hour of Bloomberg Surveillance starts right now. Equity futures on the S&P 500 firmer by 0.1%. On the NASDAQ 100, we're up by 0.15. And NVIDIA's not trading that low. We're down by 3.5%. It was a whole lot worse than this earlier in the session. If you've got supply concerns, Dan Ives of Wedbush says don't worry. If you've got demand concerns, don't see them yet in the numbers or in the forecast. And what you're hearing from the company and the South side is this company is still a step or two ahead of the competition.
We've been a little too bullish this morning. I'm going to cast some shade on this and explain why people are a little bit concerned. Maybe we've seen the end of moonshot growth. Maybe we have reached the point where they cannot continue to beat and raise to such degrees that people's hats are all blown off. And I think that is the ultimate fear at a time where NVIDIA has not shown the ability to move their buyer base beyond that big data center provider names. And that is a real existential concern. Are they going to broaden out? Are they going to show use cases? Are they going to be able to deliver these types of outsized expectations every single time? That's a little bit of fear you're seeing creep.
These are really, really valid concerns. The fact of the matter is, for the rest of the market right now, if you told me NVIDIA would be down 3 to 4% this morning, I wouldn't have said equity futures on the S&P would be positive by 1/10%. And based on a price action this morning, that's where we are.
It seems as if people are looking at NVIDIA as its own story that has rallied to such a degree, almost 160% so far this year. taking chips off the table, if you want to use a nice cliche. But there is this issue of it not really representing broader weakness or really the death of a story, just simply maybe questions around how far valuations can get extended in one specific name that has already lifted the entire market for the better part of 2 years.
As Lisa speaks, just a bit more weakness coming into the stock. Down by almost 4%. You are not welcome at the viewing parties.
I know.
On this report's next quarter.
I was reading the quotes from the viewing parties, and they're treated like sports events. I mean, it was at a bar.
Was this a new thing?
I guess so. I mean, there was one bar in particular in Tribeca.
Not followed this at all.
And, well, there was a really good story about it in the Journal.
Okay.
One person quoted as saying, "It's a little disappointing." She's a sports injury analyst. In and of itself, NVIDIA hit a home run today, but they've hit so many home runs in past quarters. I mean, essentially, that's what it's being treated as. It's sort of, can they beat? Can they blow it away? Can he come out? And is he going to be Mookie Betts? But this is the question, right? At a certain point, if they can only look like a regular company and not the rock star in his leather jacket, then suddenly people say, well, maybe they shouldn't have the valuation they do.
The stock is down by 4%. The broader market doing okay, up 0.1%. The next stop for this market, by the way, 90 minutes from now, jobless claims in America. This is the big data point for many of you. The appetizer, if you will, going into the payrolls report on September 6th, ahead of September 18th and that Federal Reserve get-together. How low does this number need to be? How weak do payrolls need to be? How high does unemployment need to be to change that 25 basis point cut to 50?
You know, it's a valid question. How much are we going to see actual dissent on this FOMC committee? Maybe not necessarily with 25 or 50, but just even more viscerally discussing why they disagree with Fed Chair Jay Powell. To me, there is an argument, and you've made this, and we have talked about this, and I agree with it, that this level of benchmark rates is just structurally a lot higher than where inflation is at, and you can make an argument for why rates should be substantially lower. But they have not led the market to believe that a 50 basis point is actually the base case. They have that optionality if the market does, if the economy does show signs of deteriorating faster than expected. Hard to see how they could really see that bar met unless we see true weakness.
There appears to be some daylight between Chairman Powell and other people on the committee, just based on what we've heard from them all in the last week or so. Elsewhere, outside of equities, in the bond market, we look like this. On a 10-year Treasury at the moment, your yield further down the curve, just about unchanged. 382.92, some weakness for the euro, some strength for the US dollar going against the grain. 110.97 on euro dollar. The read on German regional CPI, a little bit softer than maybe expected, teeing up further rate cuts down the road to the ECB, a weaker euro. That's the story cross-asset, the story for the next hour or so. Coming up, Drew Pettit of Citi as stocks fall following NVIDIA earnings. Heidi Kribo-Redeker of the Council on Foreign Relations ahead of tonight's Harris Waltz sit-down interview. And Lydia Basur of EY on her call for 3 Fed cuts before year-end. We begin with our top story, NVIDIA edging lower after failing to live up to sky-high expectations. Drew Pettit of Citi writing the following: high implied growth expectations above long-run estimates create a high bar for results. Essentially, you need a beat and raise that translates into out-year street numbers moving higher as well to justify current prices. Drew joins us for more. Drew, do you think the bar then was just a little bit too high maybe for the NVIDIAs of this world?
Yeah, I honestly think it's been that way for the better part of this year. Look, before we had our summer squall and the pullback we had, we were talking about taking some profits on the AI high flyers. Now, the market reset expectations a little bit lower, but then bounced right back. So we basically were right back where we started heading into the NVIDIA report. So when we look at the results, yeah, you had an okay beat. They didn't really talk down current year expectations, but the bar's pretty high for the stock. And look, a little bit of a pullback seems healthy right now.
We spoke to Northwestern Mutual earlier this week, making the point, as many people have owned, that if you don't own NVIDIA, you've underperformed the S&P 500, all else being equal, by something like 400 basis points. Drew, is this a theme, a stock that you can afford not to own?
We don't think so. Actually, it's funny. We moved tech from an overweight to a market weight. We think you need to have exposure here. But on some of our focus lists, including our thematic 30 focus list, we actually don't have NVIDIA, and those lists have really kept pace. If you're not going to own NVIDIA, you need some derivative of it. I honestly think, we talked about this before last time I was on, there's a lot of career risk if you don't own this stock.
There's a difference between not owning it, though, and selling a little bit to buy other things. There's sort of an economic bet here that there's going to be some sort of recovery that's going to make less loved names look more attractive. It's not just about NVIDIA and the valuations there. How much of this story for you is that you see economic growth upticks, maybe because of the rate cuts that we're expecting from the Federal Reserve, that offsets the potential gains from the AI story that's been really priced pretty closely in NVIDIA?
I don't know if it necessarily offsets it. I would say it just helps broaden market returns. And look, if we're going to tie this all the way back to fundamentals, we're actually starting to see more stocks